the stage for this discussion on the pioneering work that the National Bank of Ethiopia is doing to promote women's financial inclusion in the country. So we are two presenters, but we're going to give a brief overview and then hand it over to the distinguished panel. But over the last 2 days, we've heard a lot about the significant progress that Ethiopia has been making in transforming its financial sector through a range of regulatory reforms, digital transformation, that are all expanding financial access, driving investment, and fostering more inclusive economic growth. And yet, as we've also heard, there are some very critical gaps that remain, especially when it comes to financial inclusion and women's access in that scenario. Women, as we know in Ethiopia, are less likely to own a bank account than men. They are less likely to have access to formal credit, and they are disproportionately excluded from digital financial services. These disparities, become even more stark for rural women who face additional barriers such as limited ID access, low financial literacy, and mobility constraints. So it's within this context that the National Bank of Ethiopia has launched its ambitious agenda to help close the gender gap by developing a gender scorecard for the financial sector. This initiative directly supports the commitments made by the government of Ethiopia under the National Financial Inclusion Strategy, as well as significant financial sector reforms, including the recent ESG guidelines for banks, which call for, among other things, the collection of gender disaggregated data and voluntary reporting on gender performance from everything from access to credit to leadership and products and services in the market. The main objective of this initiative is to provide a structured tool for monitoring and benchmarking progress on women's financial inclusion within financial institutions by introducing a standardized process for regularly collecting and reporting sex disaggregated data, improving transparency and accountability on women's inclusion progress, and enabling evidence-based policymaking by banks and regulators. And significantly, it also provides change management tools for financial institutions to help integrate inclusion considerations across governance, HR, operations, and client engagement. Sorry. I think my slides are not. Excuse me. So I'm doing two things at once, and I'm getting myself a little bit confused. And it seems to be moving on its own. All right. So as part of this process, we wanted to ensure that there was alignment with international best practices and reviewed all the key women's financial inclusion measurement tools currently used in the market, which include scorecards such as the State Bank of Pakistan's Banking on Equality scorecard, which until now is the only public regulatory benchmark that tracks banks against national gender inclusion targets. We also looked at social impact investment tools, including SAFE and equitable, which are increasingly being used by impact investors to assess 2x compliance and evaluate performance against potential investee commitments. And we looked at other investment and technical frameworks and institutional assessments that are really looking at and geared towards financial institutions as they work to tailor their products to be more women-centered to reach this segment of the market. As part of this process, I'm so sorry. I don't know what's happening with my clicker.
you need some help, some technical help?
I think it's not working.
The clicker? Can we check the clicker? Go and tell her. Please just bear with us as we try to
Thanks, I think we're
fix
aligned.
this.
All right,
Are we okay now?
I think so.
Okay.
As part of this process, the National Bank of Ethiopia conducted extensive stakeholder consultations. We shared draft indicators, and feedback was collected from a wide range of stakeholders, including through a validation workshop with all of the banks, reinforcing transparency and inclusiveness of this engagement. The feedback from that consultation was overwhelmingly positive, with a strong consensus for the need for this type of gender disaggregated data, a common core set of indicators and definitions to ensure consistency across reporting and monitoring, and also a very clear call sign from the National Bank of Ethiopia to take a leadership role in mandating and standardizing gender data reporting across the sector. The scorecard framework is organized around two key pillars: inclusive financial institutions, which really focuses on internal equity goals, including workforce diversity, leadership, and policies that support women's advancement in the workforce, as well as a pillar on inclusive financial services, which looks at external-facing indicators, including women's access to bank accounts, credit, and tailored financial products, as well as innovations intended to move the needle on women's financial inclusion. This dual focus, internal and external, was intentional to provide a holistic approach to achieving national inclusion commitments and to enable a more complete view of progress and a stronger foundation for sustained impact. In order to ensure that the scorecard promotes action, and not just be a monitoring tool, the NBE set clear targets for each indicator, and the benchmarks are based on national mandates that are aligned with national commitments on women's financial inclusion, as well as global standards such as the 2X criteria, which is more increasingly becoming a norm in our market. The indicators are mostly quantitative so that we could be sure to capture them clearly across banks and types of financial institutions. And the scores were calculated based on two sets: average indicators per dimension, and then weighted overall score set by the NBE in terms of relative importance of each of those. And then finally, to support meaningful progress, the scorecard is set up according to a tiering system. So we're looking at practices for women's financial inclusion from neutral to transformational. And it's really designed to encourage steady advancement over time. So not just a scoring mechanism, but really to help financial institutions look at themselves against their peers and understand where the baseline is for the financial sector more broadly. And by doing this, we were hoping to promote continuous improvement, reinforce balanced progress across the sector, both in terms of internal policies as well as products and services in the market, and enabling comparative insights across progress and performance. Thank you. I'm going to hand it over at this point to have a quick preview of some of the initial findings coming from the first round of data collection. Thank you.
Thank you, Dina. And now I am continue to discuss about the test, or this scorecard has been working in the financial institutions, especially banks. So let me start saying some words regarding women's. We said no one is left behind, especially in finance in this forum. We talked about agri-finance, where 85% of people are covered, and financial inclusion, which the strategy focused more on two issues like digitization and serving unincluded or unserved segment of people and regions. So NB hosted the National Financial Inclusion, the first and the second, now we are going to the third, and committed for all program to implement and take its part as specific strategy for both digitization and inclusion. So National Bank has institutionalized to implement women financial inclusion targets and establish new fin, a desk that we are now going to show rooms in the showrooms case, so which National Bank is developed in a collaboration with World Bank, African Gender Inclusive Lab. So financial inclusion is not working just to include women. As part of target, currently the gender gap in financial inclusion as the Findex reported is 19. In the next or the second national financial inclusion, the second is to target to move to 10%. So women are saver. Yesterday we have saying commercial bank CEO Ato Abe, women are saver and paying its loan time. So to include women in finance can be a business. I say that because the market for financial inclusion that is not touched. So with these remarks, I think I am presenting the slide. I just 3 or 4 slides, like one part is the implementation of this roadmap for the scorecard. Second is the performance that the banks has implemented, like testing of the scorecard and threshold, the summary of the threshold with the target. And next is the key dimension that the banks has performed. And finally, the moment to action. So in the implementation roadmap, that in the slide, the scorecard National Bank is planned to women's financial inclusion is developed together with, as I said, World Bank, African Gender Inclusive Lab. So formally introduced the scorecard first by starting internal discussion with different directorates. So the insight is the pilot informed refinement. The sector engagement has 30 banks has engaged and collect or giving their, we distributed the template to all banks, but they provided 30 banks in the financial institutions. So we looked ahead that we'll focus on refining when we have assessed or test the scorecard and expand to incorporate new indicators and also continue to collaboration. When we see the chart, maybe, yeah, this is, I think, a normal chart that is distribution among banks by proposed level. One bank is gender neutral. It's, I think, a normal curve. And the third, that is the whole or the big amount of banks are in the middle, that's building modern. In the left, there is 3 banks, intentional gender initiative, and the one bank is transformational bank. So this is the general score that we are getting when we evaluate the performance. In the emerging proposed or access key dimensions, we take 3 indicators, which is internal, women in world, women in working force, which is average, sorry. I can see it. The first indicator is women in the workforce. It is average and progressive in board representatives. The second is use of financial products by women. It's also, on average, more women access to credit. And also the financial innovation for women, it's also on average, it's the same almost all, because 3.02 is women in workforce. At the beginning, too many women are hired in the financial sector. So this is across key dimension of the test, the scorecard test. For the final, maybe it's from measurement action that we are now going to be taken as a major milestone in Ethiopia journey toward equitable finance. The first reporting cycle shows progress, but highlight need to deeper institutionalize. So National Bank of Ethiopia has to be guide regulatory reforms, facilitate peer learning, and support technical assistance to banks and monitor progress. The second is reinforces the critical role of public publicity and sector transformation. So the government-led benchmarks, that is leadership, target, and national financial inclusion, ESG also is shifting institutional behavior. So the continual regulatory leadership is institutional commitment are essential to embed inclusion as a permanent feature. So with this, I think collaboration is important to have or to include women as a financial inclusion. Thank you.
Thank you so much, Waisero Mata. Thank you, Dina, for setting the scene for us. And welcome, everyone. I think we're doing very well for the dreaded Friday afternoon, right after lunch panel. I think that is a reflection of the importance that this topic has for so many of you. A special welcome also to Governor Mamo. Thank you so much for being here. We are panel 11. And if I had to summarize the previous 10 panels over the last 2 days, in one sentence, it would be, this train is leaving the station. We've heard so many stories in the last 10 panels about growth, about expansion, acceleration, progress. But we also have seen that progress means different things for different people, and that in Ethiopia right now, that means that the financial inclusion gap between men and women, instead of shrinking, is actually increasing. So as this train is leaving the station, let us make sure that we're not leaving half the passengers out on the platform. Our collective mission, I think, in the Ethiopian financial sector has to be making the financial sector work for women. And that is not just the title of a conference that the National Bank, together with the World Bank, put on a year ago. It has since also become a slogan for a whole host of activities. I met outside with the first graduates of the New Fin trainee program that brings young women, provides training to young women who are just entering the banking profession. I've seen the slogan, making the capital market work for women, so really encouraging to see all of that. And I think today we're marking another step forward on this agenda with the launch of the gender scorecard. And I think it's a big step. It's a big step because the scorecard gives us targets to work towards, but it also gives us the benchmarks and the measurement for us to know where we stand in that process. I know that many of you who are here from commercial banks in Ethiopia will be curious to see the scores for your bank, and we will get to that, but we will get to that at the end of the panel. In the meantime, let us hear and have a conversation with some of the people in the country who are working hard to make the financial sector work for women, whether that's as leaders in the banking sector or as development partners working on this agenda. So if I can start with my first question to Wazir Tigis from Enat Bank. You will have seen that there were 30 banks across the country that were scored in this initial exercise. One of them got the rating of transformational, and it was Enat Bank. Can we get a big round of applause for Enat Bank, please? So Tigis, were you surprised to hear that?
Thank you, Tony. But before I answer your interesting question, I would like to thank National Bank of Ethiopia, the organizer. It's a wonderful learning platform. And again, I want to thank that making the financial sector reform gender-oriented reform. I really want to, on behalf of Nat Bank, in the management of Nat Bank, this was, as you know, it's close to our heart. So it's good. We've been hearing that the reform is comprehensive. It's something that we want to upload National Bank of Ethiopia in front of this gathering. For your question, no, it's not a surprise for me.
Let me follow up on that then, maybe by asking you to tell us a little bit more about ENAT's mission and what you're doing for women's financial inclusion in the country.
Okay, that's what I said. It's not surprising for me. As you know, gender responsiveness, women financial inclusion, and women empowerment was the DNA of Nat Bank. From the outset, Nat Bank was founded by women, as you know, 11 women. So for the last 12 years, we have been encapsulating this vision of becoming the first choice bank of Ethiopia by maximizing women economic empowerment in 5 strategic pillars. One of it was women empowerment. You know, women empowerment taken, as I said, as a nucleus of the banking existence. It's our mission and our vision. So we put a dedicated banking solution department, women banking solution department, because Nat Bank took a good stock of the barriers and the challenges of finance access to women. So as you know, there is a demand side and supply side challenges for women to access financing. So with this principle, Nat Bank found it very critical to have a dedicated department for banking solution department, and we put a dedicated fund so that one of the challenge was this collateral challenge. So we need to work innovatively, you know, how to reduce the collateral barriers of those women. So the next strategic pillar is being innovative. Nat Bank became innovative in traditional way. To say some of the issues that how we go innovative, banks, you know, we collect savings. So we make saving products to be a collateral risk guarantee. We should do that because we have a product and not a cash product. So we change the traditional products to serve or to reduce the challenges and the barriers. And for that, I wouldn't say much how Nat Bank being innovative. As you know, we were the winner of the financial, you know, innovative financial window from World Bank. So we've been, you do your own analysis and you found that Nat Bank is working innovatively. So we're using that fund, you know, to bridge the financial gap that we are having. And the next strategic pillar is that partnership. We've been saying yesterday and today, we have been saying that partnership is a key. So we partner to reduce, since 12 years, we partner with individuals, development agencies, NGOs, and UN Women, so that these are the most critical, you know, partner in reducing the poverty, and they are working to alleviate the burden of the woman. So we need to change that platform because the fund that the grant these NGOs or development association getting, it has to be, the impact has to be, you know, increased. So we develop a platform that those NGOs and any individuals, they can bring the fund to Nat Bank, they can put it to Nat Bank, so it would be used as a collateral, and we change the fund to produce income generating activity. And the last is digitalization. Digitalization, when we're talking about in the morning, Nat Bank is the second to go digital next to coup. So we addressed 22,000 only women, and we dispersed 1.4 billion for the last 1 year. So imagine that we are making a big impact. And the last one is advocacy. For the last 12 years, NatBank is doing advocacy, that women has to be included. As you know, women has hidden growth reserve. We've been all the studies and shows that the opportunities that's missed because women are not included in the financial sector, they're not participating in the economy as a whole. So this has to change. I think this time is really a thrilling time, exciting time for NatBank and as well for the sector, because NatBank has leveraged the business profit. You know, we listen in the mornings that the profit has to be muted, you know, the objective. And NatBank has changed that. That's putting dedicated fund to 3 to 5% from the shareholders. So I can go on a day or the whole day to state how NatBank is doing.
I think I'm getting a sense of why this did not come as a surprise to you.
Thank you so much.
Thank you so much, Tigist. Atoderi, if I can continue with you. The good news for Cooperative Bank of Oromia was that you were the top scorer on the innovation score, which looks at both products specifically designed for women and digital lending to women. Can you tell us a little bit about the secret sauce, the secrets that Cooperative Bank or Coop Bank, what puts you ahead of the market in this?
Thank you, Tony. And I would like to extend my sincere thanks to National Bank of Ethiopia for having me on this important and the first kind of financial forum. The secret sauce is purpose-driven innovation. Our purpose is empowering communities and transforming lives. So before explaining the detailed changes, let me tell you some couples of mindsets and the belief we have. Financial inclusion. We don't believe financial inclusion or we don't treat financial inclusion as a compliance box. We rather believe as a purpose that can empower communities and transforming lives for the better future and the generation to come. The second mindset and the belief as a bank we have is innovation for us is not tech solution. It is a purpose. It is a vehicle that fulfill our purpose to empowering communities and transforming lives. Of course, we are doing strategy. We are introducing different strategy at different time. Recently, we have introduced S-cubic strategy, winning strategy, a segment-led shift at scale. We have done a lot of experiments over the last 3-4 years, and now we wanted to scale it out to the intended segments, which is aligned to the national reform agendas and the financial sector reform agendas as well. These are the way we do. So when we see the key innovative results, the Michu and collateralized digital lending platform, which is a flagship for the bank, and which is a flagship for the country as well, and which has contributed a lot to bring the financial inclusion, both the needy community, mainly including women. On Michu, it's very difficult to tell you the number, by the way. Every time the number is changing, because I have seen that the impact of the digital on exponential growth. Munir was telling you in the morning 1.3 million loan accounts. When I see the dashboard of just during the lunchtime, 1.47 million loans accounts, 24.5 billion birr disbursement. And surprisingly, out of this, 80% of the loan account goes to women. 80% goes to women. I think, as already said in many things, the number speaks itself. His Excellency Governor Mamo usually acknowledged us and recognize our performance in any stage. Of course, he said it again yesterday as well. Recently, His Excellency Prime Minister, he had an interview on Tech Talk. He mentioned our bank. This is a critical message. We don't see this as well as a motivational aspect only. It's a big responsibility, those leaders are really putting on us to contribute more, to transform, and to bring impact. So for me, it is a critical responsibility the leaders have putting on my shoulder. So this is how we are seeing things. And when we see the women's side, partnering with Kefiya, of course, we have done a lot of things. My brother Munir, we have struggled a lot of years, for the last so many years. And partnering with MasterCard Foundation. And we have developed a tailored Michu loans, Michu Kia, for women only, which is based on the need of the women. So surprisingly, with 8 months, we launched this product in September. With 8 months, over 1 million accounts, 7.3 billion birr disbursement within 8 months. This is, for me, unbelievable when I see the figure as well.
Thank you.
I will finish. So, you know, I have also another product is on women with World Bank, African Gender Innovation Lab. We have a revenue-based financing. We asked women who told us revenues does not, or cash flow does not the same for every week, for every month, for every quarter. So we have designed products that fit their cash flow. And with Mercy Crops and the Care Ethiopia as well, as VSL, Village Saving Loan Association, which is similar to like Ahmed Yunus of Grameen Bank of Bangladesh. And of course, with Kefiya as well, we have piloted the Michu digital on Sharia compliant financing as well. So I do have a lot of things for agriculture and everything. So we are doing this not because of, complying something, but because of bringing the intended impact on the community that needs or underserved, so to unlock the potential for women especially.
Thank you so much, Atadaribi. I know as moderator, I need to keep track of time here, but I can't possibly stop you from talking about our work on revenue-based finance, so that was very sneaky of you. You mentioned the MasterCard Foundation. Atsuko, if I can hand it over to you, and we switch a bit from the perspective on the lenders to the borrowers. So the MasterCard Foundation has made a big bet on youth employment through entrepreneurship of youth, and particularly of women as well. So tell us, where does access to capital, access to finance come in that work, in that realm?
Thank you so much, Tony, and thank you. It's a great pleasure to be here at this time when there's so much courage, commitment, community to really transform the economy. And the actors here on the stage and in the audience, really, I think are all supporting this transformation that's happening now. With regards to women, I don't think this crowd needs to be convinced. We did a study about 2 years ago when we realized that to enhance women's participation in the economy, Africa's economy, would increase contribution to GDP by $287 billion. And we're hoping a lot of it will be in Ethiopia. The reason why the MasterCard Foundation focuses on young entrepreneurs is that it is the future. The reason why we focus on micro entrepreneurs is because that's where young people are. We were talking to a young entrepreneur this morning, and the entrepreneur said 50% of the population in Ethiopia today is under 25. So that's an amazing statistic. We know that by focusing on young women, finance is one of the critical enablers to ensure they grow. We've also learned that it's not just access to finance, but it's coupled with capacity building, skills, mindset shift, resilience, self-confidence, and route to market. By focusing on young women, really tailoring product to young women, it can make a huge difference. The MasterCard Foundation has been supporting actors in this space. We've been supporting banks. I do believe that the foundation in Ethiopia is working with 13 banks, been supporting MFIs, supporting fintechs. It is you who make the difference. By targeting MSMEs, by targeting young people, by targeting young women. Thank you very much.
Thank you so much, Etsuko. Final question goes to you, Teddy. So in a few moments, all the banks in the room will see how they scored on the Women's Financial Inclusion Scorecard. I hope I'm not saying too much when I say that I think there's going to be some questions around how can I improve my score the next time. So with all the work that you've done at the Gen Innovation Lab on supporting women, both on banks, both on women's careers within the organization, and on outreach to the female market segment. What do you think the main topics are that banks should be looking into?
Thank you, Tony. So I'm very glad that we finally have this benchmark in the form of the gender scorecard. You know, as you have seen from the presentation from Dina and Martha, you know, it has different components in terms of the external and also the internal. I mean, for this discussion, maybe I'll focus more on the internal, but I think one thing is important is it's very important that both as a sector and also as individual banks or institutions, we need to take a good, honest look about, you know, where we stand and what progress we have made, but also in terms of what gaps do exist. So at the Africa Gender Innovation Lab and broadly at the World Bank, we have been working on these, you know, broad topics around access to finance, expanding the access and usage of financial services and so on. And the data tells us that there is an existing and growing gap in some areas. And when we see why this gap exists, it's because how we deliver the services, right? So for example, when we do traditional kind of account opening campaigns, or whether it's about promoting digital financial services or the use cases, or even the credit products, the uptake may not necessarily be the same across different segments. So it's very important to understand the segment, try to create products and services that are purposeful and tailored to that specific segment. To give you an example, as you may know, the World Bank has had a large financing project, a $250 million called WEDEP, which is actually a pioneer in providing dedicated financing to women SMEs. And one of the things we noticed that even with the availability of funding, resources, which is the main constraint, but the adaptation rate or the use rate has been limited. So through our work at the Gender Innovation Lab, we have been experimenting different approaches about, you know, pushing the boundaries and trying to optimize in ways to expand access and so on. So as Todorebe mentioned, for example, we have collaborated with Cooperative Bank of Oromia on this innovative cash flow and revenue-based financing tools. We have worked with several microfinance institutions in Ethiopia, who I see here also, on to optimize and to improve their cash flow-based lending to actually make great decisions. But we have also been fortunate enough, for example, to partner with Kafia and Enat Bank on uncollateralized digital lending. Similarly, also with a few banks on psychometric-based assessments. So all of these are, even, having access to the capital is an issue, but even with the availability of the resources, how can we be purposeful and optimize better to serve the women segment better? So through all of this, we have found very interesting insights and encouraging results as well. And hopefully we'll be able to measure those results and be able to scale them through the program. So one thing I would like to say is that innovation is key, and the way that you see also these big numbers, for example, in millions and in billions of births that are going out in the form of credit or in terms of adaptation of digital financial services, we see results when there is innovation, when we are experimenting with different approaches. So experimenting does not mean it will work every time or all the time or in all places, but we have to try, and we try to learn from it and try to scale what is working. And that's the whole theme of what we do. It's through our work, it's about try different approaches, new approaches, whether it's through digitization, whether it's through optimization, or coming up with new ways of processing or launching products. So that's the key message that I would like to do.
Thanks,
Maybe, Tony, if you allow me, just one more thing. Sure. So I think just key takeaways, for example, is we need to embrace innovation, both in the products we offer, but not only that, but also how we deliver them. So if we have a beautiful, I know all of the banks here, I've seen the showcase as well, all of us have a dedicated product for the youth, for the women, and so on. But if we are marketing or bringing these products, or if there is no value proposition on those products, the uptake would be low. So it's not only about creating the products, but how we deliver the products also needs to be innovative and trying out different things. And this will be a powerful and improving, powerful path in terms of increasing both the access and the access and also the usage of financial services. And it's one of the easiest way to improve your rank on the gender scorecard that will be unveiled shortly.
Thank you so much, Teddy. Now, when you're the after-lunch panel on a Friday, you have to at least end on a social media-friendly note. So before the session, I asked all of our panelists to write down one thing that Ethiopian banks can do to make the financial sector work for women. Out of all the things we've heard, what is the one thing that you think will make the biggest impact? So in your own words, maybe starting with Tigist, in a sentence, not more than a sentence, what are the answers that you came up with?
What I wrote is that for making, only like this. Make it strategic focus and structural alignment is really required to advance women finance access. But I want to thank, Kafiya, MasterCard Foundation.
Awesome, thank you. One sentence, thank you.
My one sentence is purpose-driven innovation. Bricks as mortal doesn't bring the intended transformation. That's why I use this term. Thank you.
Thank you so much. I have my own. Tailor product to young women. My sentence is, when a woman is enabled, she brings the income, and the household income can increase by 30%. 90% of her income goes back to health, nutrition, and education of the family. You enable a woman, you enable an economy. Thank you.
Thank you.
Thank you. I think my one word is innovate. It's about try, measure and scale whatever works.
Thank you.
Awesome.
Thanks,
Tony,
all of you.
Tony, can I intervene and ask the panelists to hold up their scorecards and their messages, and let's have a round of applause while the photographers take a photo. Awesome. Fantastic.
Thank you so much. And before I ask Yvonne to come up on stage and release the results of the first Ethiopian gender scorecard, let me say some very, very quick thank yous to all our panelists, of course, to the presenters, to Yemi Kinfe, Uloma Ogbar, Ramona Kettenstock, who've worked hard on the scorecard and on the results, to our generous friends at Global Affairs Canada, at the Gates Foundation, to Jote Work, who's the greatest champion that this topic could have in Ethiopia. Jote, you're amazing. Governor Mamo, thank you so much for being here and championing this cause as well. And with that, thank you all for being here, and over to you, Yvonne.
Thank you very much, Tony. Thank you. All right. Thank you very much. Thank you, Tony, for guiding that fantastic discussion. To close out this session, the National Bank of Ethiopia is pleased to formally launch the first Women's Financial Inclusion Scorecard report, developed with the support of the World Bank's Africa Gender Innovation Lab, the BKP Investment Advisors, and the Gates Foundation. The landmark report shares how banks across Ethiopia performed in the inaugural round of data collection, offering a snapshot of where we stand and where we must go to close the gender gap in finance. A QR code, fantastic, it's there. A QR code is now projected on the screen, which you can scan to access the report. We encourage you strongly to read it, reflect on the findings, and help us shape the path forward. Congratulations again to all who made this milestone possible. A round of applause for the panelists again, and thank you so much for this fantastic session. Please use your devices to scan the code, and I'm going to ask the panelists to come to the front of the stage for a photograph. Please encourage them. Great. Yep, awesome. Thank you very much to the panel on promoting women's access to finance, keeping the score on the women's financial inclusion. And I'm told that the QR code is going to be uploaded to the Ethiopia Finance Forum website, and all the presentations that have been shared with you, the delegates, so far. So we will be sharing the details of the website so that you can go on it and download and save all the fantastic, insightful, informative presentations that we have listened to and heard so far. All right, so we're going to move on. We still have a couple of exciting panel discussions before the very exciting fireside with His Excellency the Governor to close the forum at the end of the day. Our next discussion is on another very emotive, interesting, important topic that really lies at the center of unlocking potential and opportunity in this economy, in this nation. Expanding access through microfinance. Expanding access through microfinance. I would like to invite our esteemed and high-level guests to the stage, panelists and moderator. Let me start with the panelists. And please, again, do encourage them as they come up. Professor Badia Eldin Ibrahim, who is a senior advisor at AgFund. Please join me up here on stage. Dr. Hailu Elias, who's the Dean, College of Business and Economics at Addis Ababa University. Sintayehu Desalgen, Acting Director, Microfinance Institutions Supervision Directorate, National ID Ethiopia. Teshome Kebede Demi, Executive Director, AEMFI. Please join us here on stage, and it gives me pleasure to invite Nazreen Adem, the founder and managing partner of ACE Advisors, to moderate this session. Please give her a round of applause as she takes to the floor. Thank you, Nazreen.
Good afternoon, everyone. Good afternoon, everyone.
Good afternoon.
There you go. I think I should have you tap dancing so you can shake off all the jitters. Thank you so much for this opportunity. It's an honor to be here moderating this panel. As Yvonne just said, our panel is going to look at the topic of how do we expand access through microfinance. Our conversation, as she said, is, I think, both timely and urgent. Microfinance has been and still is the gateway to financial inclusion. And today, we have been called to do more. Our governor, as one of his priorities, has set through the government national financial strategy goal by 2030 to increase financial inclusion from 45% to 70%. Now, with this in mind, and also with Ethiopia trying to build a modern, diversified, and digitized financial system, we need to ask ourselves, are our microfinance institutions evolving fast enough to serve small businesses, entrepreneurs, women, and rural communities that need them the most? And so this session will focus on exploring just that. We will dive into what does it take to build a resilient microfinance system that weathers shocks, drives growth for not just small businesses, but would also enable financial literacy and inclusion. As we didn't have any presentations, I want to set the context. We are all people here who are familiar with numbers, economists, financial sector, gurus and experts, and a few lawyers here and there. I will leave you with a few numbers for you to keep in mind when you're having this conversation. Right now, in Ethiopia, there are 56 licensed microfinance institutions, 6 MFIs over the past 4 years that have transitioned into commercial banks, more than 5.5 million depositors, and 830,000 borrowers. Amazing numbers, staggering. The recent National Financial Stability Report highlighted interesting numbers. These microfinance institutions accounted for 1.8 of the total financial system assets, compared to banks, which accounted for 96%. What does this 1.8 million actually mean? The trends within that speaks volume. It shows that those 5.5 billion borrowers, what their economic activities are at a grassroots level. It's about who MFIs are serving: the women, the entrepreneurs, the rural areas, the youth. So MFI's capacity to draw capital and to ensure that they are being channeled to businesses for growth. This breakdown shows that loans have increased over the past 4 years by more than double, from 17.5 billion to 39.7 billion dispersion. Amazing numbers. The net loan has increased by 26.9%, basically showing the growing role of MFIs in supplying to funding businesses. Now, what do these numbers mean? I bring here panels composed of academia, research, policy, and sector coordination. We will delve into these topics to show what are the unique lenses of the challenges and what does the future of microfinance in Ethiopia and beyond look like. I have with me Professor Ibrahim, current senior advisor at Arab Gulf Program for Development at Ag Fund, Ato Sentayew Dasaleng, acting director of microfinance, directorate at National Bank of Ethiopia, Ato Teshome Kebede, CEO of the Association of Ethiopian Microfinance Institutions, and Dr. Hairu Elias, head of the Research Center for Economic Sustainable Development. I hope you'll be able to remember these numbers that I have just rained down on you. Professor, the first question goes to you. Based on your experiences advising on different resilient microfinance systems, what kind of specific regulatory or structural measures do you believe that Ethiopia should prioritize to protect MFIs from system shocks, such as governance risk, climate change, inflation, forex?
Thank you very much. First of all, I don't want to forget to thank His Excellency, the Governor and the National Bank of Ethiopia for inviting me to this very important event. Without that, I was not able to come here. So I would give them this thank, and they deserve it. First of all, if you talk about regulations in general and resilience regulation, I don't think there is anything that fits for all. So at least every country has got its own problems and special issues to be tackled. And also I should mention that they are not only affecting the MFIs, they are also affecting the clients. So whatever I'm going to talk about is for both the MFIs. First of all, the climatic change. I have a research here, and I come up with the conclusion that given that the agricultural sector, in addition to, I think, livestock, it is a very sizable sector, I think 32% or more. Nevertheless, there are so many programs for climatic resilience agriculture, but they are not compiled together, and you cannot find any figures in relation to resilience or SDG. That is number one. So there are so many regulations that we should look at when it comes to climate change, index based livestock and product insurance, clean cooking, water harvesting, digital agriculture, asset-backed agriculture lending, financing agroforestry, and stress-resistant high-yield seeds. These are a common area where each country is always regulating and also doing a practical side for climatic change. As for the governor, I think the MFI's governance here in this country is good, but the question is, I cannot see a few things that which should be done in relation to other countries around Ethiopia. One of the most important things is the board of director committees, especially the audit committee. I think the audit committee, according to our banks, at least in Akfund, is a very important committee. Otherwise, there will be a lot of problems. Also, a periodic assessment of the board of directors' performance, as well as sitting in the office. They have to change board of directors every 3 months, every 3 years, of course. Inflation has got a double, a sort of effect, positive or negative, because inflation can increase the market price of the products of our clients, and that is good. The second thing, it also it decreases the assets price, and at the same time the repayment capabilities is going to decrease. So the best policy here is to increase the lending ceiling, as well as the loan in installments, because if the lending ceiling increase, then the installments by definition is going to increase. Foreign exchange problem, I think you are now doing, as His Excellency mentioned yesterday, there are a lot of things in the pipeline to free the economy, to free the exchange rate dealings. But anyhow, restriction and depreciation of the exchange rate and the high risk of foreign borrowing is also constitute a problem you have to look at. One of the most important things in the regulatory framework in the foreign exchange is that I don't like, at this stage at least, to let MFIs borrow from outside. Taken the experience of my country, we usually take a loan by the government or a grant and then use it for other purposes and then giving the local currency to the MFIs on a sharing formula. So at least there will be some profit to the bank in local currency. So the RUFIP, together with the Ethiopian Development Bank and IFAD, I think this is one of the successful experience. I think it has to be repeated. Lastly, political instability, resilience. I think we have to be cautious about any political instability, resilience. And some measures are really very important, like mobile, digital services. But the most important is that the central bank should allow MFIs in such a case to have a mission-driven access, because you cannot go whenever there is any political instability, you cannot do the work as normal. You have to change a lot of things. Maybe you can move from product financing to money delivery or whatever. So we had these problems, and we did it in Yemen, in Sudan, and in Syria. So a mission-driven is very important in the case of any political crisis, and the central bank should be aware of this and giving the chance to MFIs to do this. Thank you.
Thank you, Professor. I think using what you just said as a leverage, you said no size fits for all. With that in mind, my next question goes to Ato Santayo of the National Bank. Ethiopia's MFIs serving millions are still faced with critical challenges ranging from governance, funding shortages, resilience issues. Now, what does the National Bank have in terms of reforms that are planned underway to foster a more efficient and inclusive microfinance ecosystem in Ethiopia?
Okay, thank you. First of all, I want to inform you that Ethiopian microfinance sector is one of or the most disciplined microfinance sector across the world, and that is known across the world. Despite that, during the overall financial sector reform plan, we have identified a couple of problems that that forces us to carry out, to conduct, or to carry out reform. The first one is the issue of resilience. You know, we have a most disciplined microfinance. Despite our good history, the current capital that microfinance is having is found to be not enough given the current macroeconomic reform and the financial sector reform. As you know, opening up the financial sector as well as the economic sector means having more risk in the ecosystem. So in that case, in 2023, I think we have increased paid up capital from 10 million to 75 million. And also recently, just within 2 years period, we have reassessed the sector, and we have come up with the solutions. The first thing still is the issue of resilience and the adequacy of capital. So in terms of adequacy of capital, there are two issues. The first one is minimum capital. The second one is ongoing capital requirement. In terms of minimum capital, we have already increased the minimum capital by 2023 to 75 million. And we are also planning to strengthen this sector going forward. And in terms of ongoing capital, the current risk-weighted capital is only based on Basel I, as like that of banks, and we are working to introduce Basel II risk-based capital requirement to microfinance institutions in parallel to increasing the minimum capital to the microfinance institution. So under the current macroeconomic environment, having more capital is found to be most important. The other issue is in terms of objective, it is found to be drifting from the mission of the microfinance sector. As you know, the sector was established by proclamation to serve the low-income people and the small and the micro enterprises. But the case on the ground is found to be shifting from that objective. So the other pillar of our reform is refocusing on the mission of the microfinance sector, so that the national objective of poverty alleviation and the inclusive financial sector would be achieved. In that case, we have worked a lot. We have conducted sensitization meetings with the microfinance CEOs, the presence of His Excellency the Governor, as well as at directorate level. So we are also enforcing that proclamation. We have also policy instrument in terms of directive, so that they would be serving the poor and the low-income people. That means we have a loan limit to a single person, as well as a loan limit for borrowers on group basis, which must be on group guarantee basis. That has a couple of objectives. The first one is the loan should reach the majority of the poor. The second one is those who do not have a collateral should access the loan. So the policy objective is both of that. So we are reinforcing and refocusing those already existing frameworks to ensure access to finance to the poor. And in parallel, we are working to strengthen the capital base of the microfinance institutions with ongoing and minimum capital requirements. We are so working on these two important pillars so that they would be sustainably providing financial services to the low-income people. And ultimately, we would be achieving the national objective of financial inclusion and the poverty reduction.
Thank you, Santayo. I think you again opened a segue for me to my next question to Atotshome. You rightly mentioned that currently MFIs are facing emission drift. This was further highlighted with the numbers that the Financial Stability Report presented to us, where 29% of the loan portfolio in 2020 of agriculture and rural lending declined to 18% by 2024. Agriculture only increased from 4.17 billion birr disbursement, 7.1, whereas trade or services increased from 4.8 to 16.7. Now, from your position at AMFI, what should be done to reorient or realign the microfinance institutions' focus back toward their mission and goals, as Atotshome rightly mentioned, as Santayo said, from their mission drift without compromising their financial sustainability and ensuring their financial viability?
Okay, thank you very much. I have to express my impression since yesterday, hearing that banks are interested to come down to the rural areas, availing financial services to small-scale holder farmers and micro and small enterprises in both rural and urban areas. I think this is a well appreciated initiative since so far MFIs were alone in rural areas, in remote areas, giving financial services to rural community. By the way, the microfinance institution in this country finance the real agriculture, give loan for seed, for fertilizer, for other agriculture-related activities. When we meet with microfinance institutions working in even neighboring countries, they were surprised how you dare to finance this risky business. But microfinance in this country financing this activity, they managed to enforce the collection of more than 95% at the lowest. But now, like has been said, there is a tendency of, shying away from rural areas, coming from rural finance activities to urban areas because of some pushing factors. I think definitely this is a machine drift. As per the preamble of the proclamation itself, MFIs are required to give financial services, both credit and saving for small scaleholder farmers, micro and small enterprises, both in rural and urban areas. But there are issues which push them to refrain, expand their outreach to rural areas. The one reason is there is a capacity problem for those MFIs recently joining the sector, which are coming from, a private capital. They are joining the sector to generate income and, distribute dividend for their shareholders. So, because of this, the recently joining institutions are definitely concentrating in areas which generate them more revenue. This is existing realities. The other one is because of the changing trend, because of the changing behavior of the customers, somehow in the rural area, social collateral, social capital. In earlier days, MFIs were giving credit by organizing the borrowers in solidarity group. So that pressure is loosening. So they are opting for individual lending. This is also one factor why MFIs are, trying to come to finance relatively better businesses in urban areas. The other one is because of the inflation, to cope up with the current existing inflationary situation, they are coming back to urban areas to give relatively higher loans. The fact that activities in the rural areas do not absorb higher loans. The other one is fear of risk. Because of certain unavoidable circumstances in rural areas, MFIs are, coming back to urban areas. So to address this one, it will be good to work on factors that push them out from accessing finance in rural areas. One of them is work on the capacity building so that MFIs themselves can work on availing tailor-made financial service that could enable them to manage the risks that could crop up from the type of agricultural activities they are engaged in. The other one should be, I think there has to be a de-risking facility available so that MFIs could handle the risks that could crop up from availing services to agriculture and related activities. So this is
Thank you so much, Dr. Shoma. I think the points that you highlighted would also be interesting for Dr. Hailu's consideration. Based on what Dr. Shoma said, the challenges revolve around being worried about risk, understanding what are the reasons behind why MFIs are not loaning, issues of capacity, lack of expertise. With all of this in mind, you had done a recent study where it emphasized about resilience frameworks and the need for MFIs to bounce forward. Now, with this in mind, from a systems perspective and from the challenges that have just been highlighted from Tashoma, what practical steps should policymakers as well as institutions prioritize to help them absorb shocks as well as have a forward-looking outlook on how to deal with this?
Thank you, Nasreen. I would like to thank His Excellency, the Governor of the National Bank of Ethiopia, and the organizing team for inviting me to present what I know about this sector. Just coming to your question specifically, when we think about resilience, we should think about the ecosystem as a whole. The ecosystem. So when I say this, we think about individual microfinance institutions, their employees, their management team, their board. That's one core area to focus on. And the other is the market. The market is very important. What's going on in the market? How is the market behaving? That's very important. And then we have the customers, the clients. They are very much vulnerable to various shocks, including economic shocks, climatic shocks, natural, as Prof mentioned, drought, flooding. For instance, microfinance is basically working in the rural setting. So you can imagine what can happen if drought happens in a given village. If they lose all their crops, can they really pay back? So we should think about the clients. And also, above all, I think we should think about the policymakers. In this case, the regulator, the National Bank of Ethiopia, in our specific case. I think there are things, so we should think in this framework. That's what I mean by systems thinking. Not only an individual MFI, or not only even MFI alone, but the banking sector also. Because collaboration is very important, not competition. Because these days they are really competing. That's a very serious issue. For instance, when coming to governance, these days I try to check the data, and in most cases there are MFIs still backed by NGOs. In those cases, the boards are nominal shareholders, basically. So you can imagine, if they are nominal, then the commitment, the incentive to take bold action, to be very serious for the commitment, that has a problem. Of course, there are money issues which we can raise. So as the money accumulates, as the capital accumulates, these persons can ask even for the ownership of the funding. And increasing the capital is, again, another issue. So for this, I think the National Bank should come up with some directive. That's, I think, one thing, because the leadership really matters, starting from the board. And the other issue, for instance, from the National Bank of Ethiopia, what can be done is thinking about this, the single shareholder limit. Okay? If one person can buy, for instance, 80%, 90% of the share, And if something happens to that person, you can imagine what will happen. So there should be a specific guideline or a specific directive on this also. So this is what can be done. So I think we also need some framework for crisis management. What if something happened to a given MFI or group of MFIs? So we have bigger ones, the medium ones, the small ones. I think we should have some tailored risk management strategies at the national bank, even at the institution level. The institutions themselves, for me, leadership is a key. Leadership is very, very key. So working with the employees, working with the leadership, working with the board. Sometimes conflicts arise between the management and the board. That's a very challenging. So I think we need to think as a system. So these are some of the areas on which we should focus on. But when I say bounce forward, what I mean is you may restore from a shock. So when you bounce back from a shock, then you may come to your initial position. But that's not enough because things are changing. COVID-19 taught us lots of things. Now the economy is changing, reform is going on. So the MFIs should think ahead. So they should bounce forward. That's what I mean by system thinking and by bouncing forward. Thank you, Nasreen.
Thank you so much, Dr. Hailu. I think I'm going to touch on what you just said when you said the ecosystem is not just about the institutions, nor is it just about the regulatory body, but also it looks at the market and at the bigger, wider ecosystem. So with that in mind, perhaps, Professor Ibrahim, you can share with us from your experience now, taking a step back and zooming out in terms of not just Ethiopia, but regional cooperation. What would that look like in terms of having a cross-border partnership or knowledge exchange from what other countries' MFI's experience have been, what their learnings look like, what kind of models can Ethiopia consider or core partners also consider to scale effectively?
Thank you very much. I think this is a quite interesting question. Let me start by what Mr. Tishumi has said with regards to the rural penetration of microfinance in Ethiopia. You have 120 million, and the total number covered so far, I think it is 5 million, as you said. So if we take about 25% of the whole population to be microfinance clients, I think we are minimum having about 30 million or maybe more to cover. And as I know, the microfinance sector to GDP is not more than 1%. I think the outreach is a very big problem, and there are so many solutions for that. One of them is expansion of the wholesale market. There is some experience which are really very successful. In my country, for example, Sudan, we allocate 12% of the portfolio to microfinance. I want the central bank to involve the commercial banks in microfinance through the microfinance institutions first by assigning, for example, starting with 2 to 3% of the total portfolio to be allocated to microfinance, either through microfinance institutions or through a formulation of a joint portfolio for microfinance. A joint portfolio can be shared with the National Bank of Ethiopia. Commercial banks can be governed by commercial banks themselves, and the whole money they accumulated can be lent on a sharing formula. For example, 50-50, 80-20, whatever they can decide. At least this can have more resources from commercial banks into the microfinance. The second issue, which is not a short-term issue, and I think the regulation are now moving for that, is to have an ABIX regulatory framework. Without having an ABIX institution, whether it is local, with local capital or foreign capital, or both of them, you cannot make sure to provide wholesaling and technical assistance to the microfinance sector. First of all, I have been looking into Africa except Ghana, there is no any African country has got any ABICS regulations. So in ACFANT, we are trying to build an ABICS institution in Africa and in the Arab world. We are constrained by the regulatory side. A wholesale grantee agency. There is some experiences that the wholesale grantee agencies can be established by the government. Central Bank, for example, in Sudan sharing 99% and the Minister of Finance 1%. And we form a government wholesale grantee. So at least that can help in siphoning money from commercial banks to MFIs because it will be granted by this wholesale grantee. You know, the credit bureau, I think this is also very important. I think the regulations are moving towards this. So I really encourage them to do that. A rating. No one talked about the rating of microfinance institutions. I think since now how many years Ethiopia has gone into microfinance institution regulatory as well as practice. I think now it is a high time for the rating. At least we can start by local rating and then we can move to the international rating. Having Islamic finance, takaful services and training is very important. Moving from micro to small enterprise by making new regulations that can allow some MFIs who are really qualified to move not only to micro, to small enterprise. The final thing, I really proposed in 2 books which I published this year and last year, an idea of conventional, non-religious, interest-free modes of finance to conventional microfinance institutions. Without any religious connotations and without any need to change the regulatory framework of the central bank. In fact, I took some case studies from here. Some of the MFIs, for your information, are practicing Islamic microfinance without even knowing that they are Islamic, just for their practicality. They found it very practical, mostly murabaha for improved seats. They sell seats to enhance productivity because the repayment was low, so they want to enhance repayment, so they sell seats beside the financing. So if productivity increased 3 to 4 times, and the clients are now able to repay even well in advance. I think this could be done. The Development Bank of Ethiopia is now having conventional as well as Islamic, and the difference is not that major. This could also be looked at and also applied to conventional. This issue is very long, and I don't want to go further than that. Thank you.
Thank you, Professor. I think you have made very interesting remarks for the National Bank to definitely consider in terms of what can and cannot be done. Santayo, the next question will come to you. So there have been significant strides being made in the enforcement sector, from digital mandates to structuring. One of the most successful is the opening up of the establishment of the capital market. Now, with that in mind, based on your perspective, how can this introduction of the capital market help MFIs address fund shortages and also help them at the same time enhancing their financial stability?
Okay. Okay. I personally believe that this capital markets is bringing to our sector, microfinance sector, blessings in terms of diversifying their source of finance. As you know, right now, the lion's share of financing is coming from deposits, and the other source is commercial borrowing and also concessionary borrowings. But that part of the loan is very insignificant and costly enough. So with the introduction of capital markets, as country experiences shows, especially the countries in Latin America, for example, Mexico and Peru and other countries' experiences shows, as a share company, as a disciplined financial sector, Ethiopian microfinance institutions can be issuers of long-term certificates, bonds, so that would minimize their cost of financing, and that is supposed to also smooth their liquidity, because they are right now very prone for liquidity risk, as deposits are financing which are one day maturing with one day. So with one day maturity, so capital markets or microfinance sector can tremendously benefit from the introduction of capital markets by diversifying their source of finance. Second, by smoothing their liquidity. Third, by lessening or by reducing cost of financing. So I think in that respect, I recommend as microfinance institutions to prepare themselves from now to conduct a study and how to utilize the current reforms, including the introduction of capital markets. Thank you.
Okay, I think my next question to Shoma will try to address from what our panelists have said so far. There are several gaps that the microfinance has been linked with. One of it being that the weak linkage between the microfinance institution and the banking system. Ato Santayo has just told us about how the microfinance institutions can access liquidity, take advantage of what the capital market has to offer. But still, with that in mind, how then can these microfinance institutions, or Ethiopia in general, foster a stronger funding and operational linkage between these two sectors, the MFIs and the banking system?
Thank you, Kate. I think the microfinance institutions availing agricultural loan for smallholder farmers, like I said, it was started immediately after the commencement of operation by the microfinance institutions in this country. Later on, I think many institutions are attracted to agricultural finance because of the credit line injection and the capacity building support that came up from the IFAD resource that was hosted and wholesaled by the Development Bank of Ethiopia. Taking this opportunity, I would really like to thank IFAD for supporting the microfinance institutions to get access to whole lending facility from the Development Bank of Ethiopia at a very reasonable and a concessional rate of interest to rechannel it to small scale holders in rural Ethiopia. Because of the demonstration of this program, some banks have started partnering with microfinance institutions to use the microfinance institutions as a retail outlet to reach out smallholder farmers and the micro and small enterprises in both settings. I think there is already experience that working with microfinance institutions by the commercial bank has already demonstrated that microfinance institutions are credit-worthy. At the same time, retail, the facilities they obtain from the commercial banking sector, but the linkage is not to the level it should be. I think it has to be strengthened, and at the same time, I think the regulatory authority has to, put some guideline so that banks can open a window for microfinance institutions so that microfinance institutions can access loan to be rechanneled to the small scale enterprises both in rural and urban areas. I think for this there is a business case for the MFIs. If they got access to this facility, there is a possibility of reaching more households in rural areas. At the same time, for the banks, at least it could be even considered as a pride to reach out to small-scale operators in rural and urban areas through microfinance institutions. So the bank linkage has to be strengthened. The fact that liquidity is among the factors that push the microfinance institutions from the rural setting from financing agriculture and related activities. Thank you.
Thanks so much, Mr. Shuma. Dr. Hailu, I think I'm going to circle back to you with one thing that you said earlier in terms of ecosystem is understanding the market, understanding what the customers need, and governance, structure leadership being one of the core focus areas. Right? Now with this in mind, how should the microfinances align their objectives, specifically on rural outreach and pro-poor lending, without compromising operational sustainability at scale, keeping in mind the challenges that are being faced from a governance perspective, as well as from a mission drift angle?
Thank you, Nasreen. I think Dr. Shoba mentioned some of these issues because this is related with the mission drift issue. Of course, lending in the rural sector is not easy because the operational cost is very high. You have small loans and they are dispersed, and so the transaction cost is very high. The operational cost is very high, so it's not easy. So through time, you will see some shift to more urban lending. For instance, the recent data, if you see the microfinance sector data, 7.1 billion goes to agriculture, but nearly 17 billion goes to trade. Yes, so this is the 2024 data says. So to realign to the initial objective, to the initial mission of making it more inclusive, alleviating poverty, contributing to the development. So one thing can be is, so rethinking about their mission and their vision again. I think the leadership should think about their mission again, and they should still focus on their mission and on their vision. Of course, there is, sometimes they may arise conflict of interest between the board and the management, the leadership. Because if it is my money, if I'm shareholder, I want the profit, okay? So I don't want to go somewhere where my money may be lost or it may not be repaid back. Therefore, I think the National Bank can come in here, can support giving different incentives, for instance. The international partners can also support giving some concessional loans. Even banks can support, can come in and can support. So in providing the loanable fund and making life a bit easier for them, providing different incentives. And of course, the stick should also come there. I mean, making this the social objectives to be one KPI. Somehow it's there, but making it bold and making it to be one KPI as indicator for the performance of the MFIs would work. Of course, we can say more on this, but for the time issue, I'll stop it here. Thank you.
Thank you so much. We have been told by Yvonne to wrap it up, but I have one last question, a common question that I'm going to be addressing to our panelists. Co-op has given us amazing numbers in terms of performance, 1.47 million loans account. 24.5 billion microloans that have been dispersed. Now, with this in mind, I'm thinking, how do we transition that microloan to small business loans? In emerging economies, formal MSMEs or small businesses, they account for 14% of GDP, and out of every 10 jobs created, they account for 7. How do we make sure MFIs are that catalyst for small businesses with special focus on women, youth, and rural entrepreneurs? And keep in mind, for every $1 invested in a woman-owned business, $3 is what you get back. Think really hard. What's that one step that you would suggest Ethiopian microfinances to think that needs to be done? Professor, I'll start with you.
Without going deep into the segments of microfinance, clients that should be served, I think one single step that the central bank and the microfinance institutions can do is to enhance outreach. Why? Because I know for the last 10 or 15 years, I have been working in the microfinance sector of Ethiopia. I know that the microfinance institutions are hungry for loanable funds. They are very hungry. And I think this could be done not on a subsidized base, but on a market based, either through blended finance or through wholesale or through joint portfolio, as I mentioned. Thank you.
So I would say I totally agree with the previous panelists. I think we should focus on innovation, purposeful innovation, and we should come up with tailored products for specific groups. I think that's a must. Thank you.
For me, single most important step is just to refocus on our mission of the sector. That is just serving the rural poor, women, and the youth. So those group of society are simply our population with no collateral, and most of the time they are not as such supported from the beginning, and they need less costly as well as less affordable products for them. So if we are refocusing,
At Santayo, one step. I've been told I need to vacate the premises.
yeah, just if we are refocusing to our mission, we will be coming back and serving those groups of society. Thank you.
I think the challenge has several challenges. So the sector has to work on the capacity building, work on innovation, invest on technology so that it can bring up to itself to the competitive edge while delivering the service to the target beneficiaries in the rural areas. Thank you.
Thank you very much. Thank you all so much for your attention. I would like to thank our panelists as well. I think we're
Thank you very much, Nazreen. Please give the panelists a round of applause. Sorry that we had to curtail the conversation. I hope it wasn't too intimidating having me walking around. Hold on. The photo. Without the photo, there was no session. So please take a photo, and then we're going to move on. Cameraman, thank you very much. We are moving very closely towards the end of the forum. Unfortunately, there is no day 3. It feels like there could be several more days of this forum. We are moving very swiftly on to 2 topics of, again, great interest and urgency: financial transparency and literacy, followed by a conversation on remittances. So on that note, I would like to invite very efficiently and speedily. You don't have to run, but you can walk very fast. Up onto the stage, the moderator for this session, Mr. Gemechu Waktola, the Group CEO of the iCapital Africa. As the moderator, if you could come up, please, to the stage. Please welcome the moderator and the panelists, Mr. Anthony Kathenge, who is the head of pricing and commercial planning at Safaricom M-Pesa Ethiopia, with broad experience in digital financial services, focusing on pricing design and driving financial inclusion. Muhyiddin Shifa, Director, Financial Consumer Protection and Education Directorate, National Bank of Ethiopia. And last but not least, Mr. Sergio Jose de Mesquita Gomez, Senior Financial Sector Specialist at the World Bank. So I'm going to be handing it over to Mr. Gemechu to get this short discussion on financial transparency, short but powerful discussion on financial transparency and literacy underway, followed by our discussion on remittances, and then the very exciting close fireside with His Excellency the Governor. Microphone, please. Can somebody come and have a look at Mr. Gemechu's microphone?
Hi, this is fine, it works. Thank you very much, everyone. I think I don't go into further details because, gentlemen, our life just got complicated when we were told that we only have 30 minutes and we have to wrap up. That was one thing. And the second thing is there was a presentation that's also cancelled, and we're going to have our conversation here. In the interest of time, I'm not going into details. Our session is on financial transparency and literacy. So just to give us a context of what this is, instead of me explaining what is it about, let me give Jan, who was about to present this, give us a context of how you want us to understand financial transparency and literacy, particularly from a price transparency perspective. It's yours.
Good afternoon, everyone, and thank you for this invitation. So I already had a challenge in delivering a presentation in 7 minutes, so I'll give you context in 3 minutes. The larger topic we're talking about is transparency and literacy, which is a huge topic. And it's actually relevant to a lot of the customers we've been talking about in the other panels, whether it's women borrowers, whether it's about the vulnerable. We decided to focus in on price transparency because it's something that MBE has been doing a lot of work on. And I should mention more generally, huge congratulations on MBE for their focus on financial consumer protection and market conduct. Under the leadership of His Excellency the Governor. We have a dedicated function, a dedicated department that's looking at these issues, which is a huge initiative. And as I said, price transparency is an important focus in the country. So why are we worried about price transparency? A couple of reasons. From the perspective of consumers, the kinds of consumers I mentioned, it's really important for them to understand the cost of products when they are deciding whether to acquire a particular product, how to compare between providers, and then when they are using the product over time. And there are a lot of challenges in the market at the moment. I'm sure if you are a consumer yourself, you see them already in the market. But there's also a huge competition implication around price transparency. We want the industry to compete on the quality of products, and the quality of pricing, and we want the financial institutions that are actually offering the best value for their products to be the ones that are succeeding. So we want to avoid unfair competition, in a sense, through opaque pricing or complicated pricing. So that's the overall aim. And of course, it also matters in relation to financial inclusion. And I'm not going to go on because I know a lot of financial inclusion experts are in the room. But if there is an understanding around what is the cost of the product you're acquiring. There are no surprises. That is a very important element around building trust and confidence for them to keep coming back and to expand their interaction with the market. So I'm going to stop there because I think we'll cover some of the policy initiatives that MBE has been working on. But one more thing to mention is we're going to be talking a lot about policy initiatives, whether it's around literacy, disclosure, conduct regulations, but ultimately a lot of the things that they're trying to achieve are things that good businesses, good financial institutions that engage well with customers a lot of the time will do innately. So in a way it's reflecting what we hope good business practices will be in any case.
Yeah, thank you very much, Jan. I think you gave us a very good context on how you want us to understand financial transparency from particularly a price perspective. And let me go to Sergio. You know, we all are partnering today to make this very brief and memorable. Remember, it's 30 minutes, we have to make it unforgettable.
Sure.
Okay? Yeah?
No,
Thank you very much. So my question to you, Sergio, is, so World Bank has helped in many countries in regards to financial transparency and consumer protection in general. So there are different contexts in different countries. So do you think these standards are applicable across different contexts of finance sector? So can you, if you highlight and give us some ideas on that regard? Thank you.
So yes, so definitely for sure, just like Jan mentioned, transparency, generally speaking, is one of the major topics when it comes to financial consumer protection. And then the question turns out to be exactly how you're going to be able to define exactly the priorities for each country. And that depends a lot because it depends on the kind of products, depends on the currently financial literacy, and even in some cases, most of the cases, the digital literacy of consumers as well, which is another factor that comes at hand. So how people are able to understand the prices and the features that are being offered to them. So a very good way to try to address this, which is exactly, for example, what currently NBE is doing through the work of FCPAD, and Muhyiddin can talk more about this for sure. It's exactly use the supervisory activities to understand what are the priorities in terms of transparency for consumer protection and how the industry needs to adapt to those standards. So it's about, so there is a lot of communication, there is a lot of under creating standards in terms of how the transparency can be improved. I like to say that transparency and is a very hard objective to achieve because actually it's not about just like providing tons of information, but actually providing the right information in the right moment and being clear about exactly what the consumers need to understand to be able to make an informed decision. And of course, many times the best way to do that will have to be achieved through testing, will have to be achieved through noticing how people are reacting to the information as well. And that is something that, for example, I think that NBE has been doing a very important job in terms of prioritizing the transparency as one of the key objectives for the market to evolve, for the industry to evolve, and then pushing the industry to move forward on that direction. And the last thing that I wanted to say, because of the time, is going to be one of the best ways to do that is exactly to be flexible, to be always mindful of how consumers are reacting, because communication actually only works if people are understanding what you want them to understand. So that, like I said, testing is important, but at the same time, for example, being very sensitive to complaints. So complaints are definitely for sure one of the most important indicators of whether or not people are understanding what you're trying to convey. So if people are complaining about the price, or people are complaining that they were surprised by something, that's a very good indicator that something needs to change. And in order to do that, you have to collect data that will help you to have this assessment as well. And again, that's something that the supervisory activities can help to improve those standards as well. So I think it's not an easy road, but it's definitely worthwhile. And then just like Gian was saying, the ultimate objective is actually to have better financial services for consumers to be able to make the best out of those relationships. So
thank you, Sergio. I think the less the time, the more people become productive. That's what I'm noticing now on the stage. So thank you very much. Anthony, I'm coming to you. Don't think this is main only stage. There was Elsa from M-Pesa, CEO. Unfortunately, she was not able to join due to a travel. So Anthony is replacing her. So Anthony, my question for as a financial service provider, what do you think the role of financial service providers in making sure that financial literacy, the role financial literacy plays in effective price transparency? And the second thing, follow-up to that is, do you think technology plays a role in that, especially when there is a large number of population with limited literacy in terms of using technology? Yours.
Okay. Thanks, Gemechu. Thank you for having us in this conversation, and we are glad to be part of it, which is part of the ever-growing and vibrant digital financial services and the overall financial services sector in Ethiopia, thanks to the leadership of Your Excellency. Now, when it comes to financial literacy and pricing transparency, as industry players, we understand that this is at the heart of driving customer trust and confidence in our products. And how do we drive this? The industry sits in a very unique intersection because we not only give products to customers, but we also shape how they interact with these products, which means we not only have to, we have to really embed financial literacy and pricing transparency throughout the entire customer experience. And what are some of the practical examples of this? One is that throughout the entire customer journey, the messaging has to be consistent and clear about what the customer is doing and what they are being charged and what they are incurring as charges. That's one. Then the second one is that the industry relies on players and agents to advance these financial services to the end users. So these agents and players, other players, must be trained so that they are not only processing these transactions, but also educating customers. And this is especially key in the low literacy areas and the underserved areas where intermediaries really play a key role in driving financial literacy and pricing transparency. Now, can we use technology and how can we use it? Of course, we can use technology because with technology, we are able to scale transparency at all levels, and we're also able to simplify our products. And when we are designing our products, we should not only think about the pricing transparency, but also crucially product transparency. Because if customers understand the product, then it also becomes easy to understand the price. And at bare minimum, again, we have some key considerations. So one is that customers must be able to understand what exactly they are buying into. What is the product that they're interacting with, and how is it going to work for them? They must also understand at what point are fees or penalties triggered. So is it at the point of setting? Is it at the point of receiving money? Is it at the point of applying for the loan or repaying for the loan? So it must be very clear at what point the charges or penalties are incurred. Then the third one is that it must be very clear to customers what are the implications of missing a step or a journey as they interact with the products. So if, for instance, you miss your repayment date, is it that time that your charged, and so on and so forth. Now, practically, how does this work? What are some of the things that the industry has embraced? So one is that the fees are displayed before a transaction is confirmed. I think most of us, if not all of us, will have made a payment here and now, and you'll have seen the charges displayed before you confirm that transaction. Then two is we need to, in terms of reaching to the underserved segments and the low literacy areas, we need to localize the interfaces. So there is the languages. We also need to think about voice prompts and symbols and icons and things like that. And then lastly, using technology, AI, chatbots, and so on and so forth. So those are some of the practical ways we can achieve this, of course, with the background of driving financial literacy and pricing transparency.
Thank you very much, Anthony. I think giving us a perspective from a perspective of finance service providers' role and also the standards and the context, I think this is very informative. And coming to Muhaddin, from my question to you is now from a regulatory perspective. And if you can describe to us National Bank of Ethiopia's transparency requirements. And again, what have you been doing so far from this perspective? And have you promoted enough, or even to promote this kind of price transparency in the finance sector? And if not, as per expectation, and then what are the enforcement mechanisms for financial service providers for non-compliance?
Thank you very much. Thank you very much for the opportunity to speak in front of high profile and in such a large number of audience. So, well, as part of ensuring transparency, fairness, and trust within the financial system, the National Bank has been implementing financial consumer protection requirements as a renewed focus to its regulatory and supervisory objectives, as emphasized by His Excellency yesterday. So the consumer protection framework consisted of a comprehensive set of requirements around fair treatment of consumers, product design and development, product promotion and marketing activity, price transparency, and treatment of consumer complaints. So for the purpose of this discussion, I'll focus on the transparency requirements. The NEB has a general obligation for financial institutions to disclose accurate, timely, and the most important function, prices to consumers. So in the implementation of these general obligations, there are specific requirements around this. One key requirement is the practice around promotional and advertisement activities. So financial institutions are required to disclose a balanced information, and they are prohibited from misleading consumers. So as far as there is any reference to the benefits of their advertisement activity, they need to disclose the risks and prices of their financial service. The second area that specific to this transparency requirement is the availability of pricing information. So financial institutions are required to disclose and make available pricing information through different channels, such as in branches, websites, apps, USSD. So this is to make effective access for financial consumers to have pricing information. And the third area that we require is related to the key fact statements. This is particularly important for credit products. So the most important information consumers, credit consumers require is cost information. So financial institutions should give a summary of important costs, interest rates, and fees, because these information may be buried in the main contractual documents, and consumers may not have the time to review all this information. So they are required to summarize this information and give it to the consumer when the consumer requests so. And the other one is the requirement is related to the notification of any price changes. So they cannot, implement new price changes retrospectively. So they should give the consumer adequate time so that the consumer will have, the opportunity to continue or cancel the contractual documents. So this is, to enable the consumer to have or to exercise its right to have appropriate information and to reduce, the vulnerabilities of, wrong decisions as a result of, power imbalance. So this is what the transparency requirements are provided in our directive. As far as the supervisory activities the National Bank has been involved with so far, so one key important area that we were involved with is related to the socialization and dissemination of our pricing requirements in particular and consumer protection requirements in general. So we have been organizing a number of consultations and capacity building programs for the financial institutions, particularly for financial institutions, to inform them the NB's expectation with regard to consumer protection requirements and to financial consumers to understand and exercise their rights and responsibilities whenever they consider a financial institutions with a particular, consider financial service to a particular financial service provider. And the other one is we have been doing is prioritization of consumer risks so as to base and prioritize our supervisory activities. So we have defined a specific set of risks which affected the consumers mostly in the current market situation, and we conducted various supervision around transparency of prices, complaints handling, liquidity issues, payment of delay of payment transfers. So we communicate the findings to financial institutions and required to remedy their deficiencies around these areas so that they can implement what the NB directive requires to do so. And those banks and other financial institutions with deficiency of the transparency requirements are penalized according to the directive. And we have also given repeated instructions on the need for having appropriate institutional arrangements to deal with consumer complaints, to display prices in different channels, in websites, USSD, apps, and branch agent locations to create effective access for consumers to have consumer prices. So these were the most important interventions that we made so far. And we also designed a course on consumer protection to build the capacity of financial institutions through the Ethiopian Institute of Financial Studies. And this training activity is being led by the Consumer Protection Directorate of the National Bank. And we will continue to guide the financial institutions around financial consumer protection requirements so far.
Yeah, thank you, Modin. Thank you very much. I think it sounds like National Bank of Ethiopia is doing a lot of jobs around consumer protection, and a lot of efforts are going into that. Quickly, just 30 seconds. You'll come back to you, Muhaddin, later. But Jan and Sergey, Anthony also, you can jump in just 30 seconds, okay? What are usually the challenges of regulators in terms of making sure that service providers ensure there is adequate price transparency? In fact, it's not, financial transparency is not about price only. There are multiple dimensions Anthony was mentioning. So what can the regulator or the service providers can learn from here? 30 seconds.
Okay. I'm going to say something slightly controversial in 30 seconds. Transparency is important, literacy is important, but my observation around the world is that often when people get asked why don't consumers understand products and prices, The easy thing to say is we lack financial literacy. They don't have enough financial education. So my challenge to you and to everyone is to maybe have a mind shift. And I think, to answer your question, Gemetria, the shift is moving towards what some of the panelists already mentioned, which is design of products. So thinking about, for digital interfaces, the look of the screens, the flow of the apps, considering who are your customers, how will they react, a lot more focus on consumer testing, and trying to think about, okay, information is important, literacy is important, but if you really want something to work effectively, product design is the key. And what we are seeing, and MBE is working a lot more on, is regulation and supervision in conjunction with industry that will have a lot more emphasis on design and not necessarily just on information. So Sergio, you can come in as the former central bank supervisor as well.
Yeah.
No. Yeah, you can also add, Sergio, on that your experience with what the National Bank of Ethiopia is doing, how you looked at it from a perspective of international best practices.
Mm-hmm.
You can add that into 30 seconds.
So I'm going to, perhaps in 30 seconds, I'm going to give you an example of a situation that would pretty much illustrate what Jan just said and what Muhyiddin is actually undertaking, and what actually Anthony is trying to do as a financial service provider. So I remember of a case of an app that was offering a loan, but because the way that the journey was designed, so there was missing like this final button for a confirmation, and people were always thinking that they would have a final moment to see the final conditions of the loan before they actually would hire the loan. And just because this glitch, let's say, this flawness in this journey, thousands of people started to actually hire the loan without wanting to. And immediately this turned out to raise hundreds of complaints, and was the kind of thing that was a bit of testing, and but anyway, if it wasn't perceived in the first moment, but at the moment that the complaints started to come in, if you're aware and sensitive to that, and then you can actually make the adjustments, and all of a sudden, so that problem was solved. It's a problem of design, but actually impacts communication, impacts transparency, and at the end of the day, it has a huge impact on how people will think and the trust that they have on financial services. So being sensitive to that, I would say, is the most important part of it. So if there is one message, is really pay attention to the indicators. Complaints is not the only one, for sure, but it's very important, and many times this very important data is coming to you, is available to financial service providers, and the question is it being used to the fullest potential or not? So that's the main message that I have at this moment, and that would summarize the best practices that we have worldwide.
Wonderful. Thank you, Sergio. Anthony, anything you'd like to add on this?
Yes.
30 seconds. Did I tell you that?
Yes.
Yes, good. Go ahead. I'm
so
transparent, you know.
Yeah, from an industry perspective and working with the regulator, one of the key challenges is lack of close collaboration. Yeah. And what do I mean by this? It is when an industry player works very hard, but very quietly to develop a product. And only at the very end is when they go to the regulator. So we are talking about product design and product transparency, which translates to pricing product transparency. Now, if the regulator is only seeing the product at the very end, then again they have to start from the start to try and understand the product and so on and so forth, which brings at times a bit of friction between the industry and the regulator. And I think what I see is an opportunity for both the regulator and the industry players to closely work together, not only at the tail end of delivering products, but right from the start. And this I've seen in different markets, and which works very well.
Wonderful.
Thank you. That's very important. So I think it's we'll end up with Muhaddin, and you understand I'm not giving any more chances. Muhaddin, I think so. As a regulator, a lot has been done. We mentioned already. This is not. This is about protecting the consumer. It's also, I think, it helps the competition too, right? It helps the competition. So, have you noticed any good practices and good conducts that you'd say? You may not mention names, but you can tell us, because financial service providers are here, that they can learn from good practices. And also, don't tell anyone if any actual enforcement that has taken place that you can give us as an example, and we wrap up the session with this. Okay?
Thank you very much. So one of the good practices that we have seen in some of the leading financial institutions in Ethiopia is the practice of disclosing prices. Of course, full disclosure is developing, yet not achieved. But some financial institutions disclose and publish their prices, all itemized fees for all products in different channels. This is really a very important step to promote transparency within the financial system. And this can be taken as a lesson to replicated by other financial institutions. And the other thing that we have seen is some financial institutions, of course, these leading financial institutions, have a very efficient call center and responsive compliant handling procedures with clear processes. That's a very important step as well, because it builds the reputation, image, and reduces the burden of the National Bank to deal with consumer compliance. That's also another important step. And the other thing in some of the financial institutions that we have seen is investing in financial education. They allocate a certain proportion of their profit to financial literacy, because they consider consumer protection as a business strategy, not only from a regulatory burden. So they see that their investment today will pay off in the future. That's what we have seen in the market at the moment.
Yeah.
As far as the enforcement measure is concerned, we were serious about the availability of internal compliant handling mechanisms. Some of the financial institutions were penalized, and we saw improvements in these financial institutions. Now, the only problem that we have seen is regarding the process. So some financial institutions, declined. They maintain the status quo rather than taking adjustments to their process. Setting up an IDR system may not be enough by itself. There must be a clear process, procedure, and systems to deal with consumer compliances. That's another issue that should be improved in the future. But the availability of this IDR system, at least within the financial system, is a very important step that I have seen.
Thank you very much, Muhaddin. I think as a consumer myself, I hate hidden costs that are not adequately disclosed. It's annoying, to be honest. It's not even fair as a consumer. So I think this coming in effect, because consumers are powerless, honestly speaking. We're not, like as consumers, we're not in the same power balance. So these regulations would protect consumers, larger public. Thank you very much. Gentlemen, thank you for your partnership in this crime of slashing the time in as much as possible. So, yeah. And I was supposed to summarize it, but I don't think I can do justice to what has already been discussed, and I can't say it any better. So, gentlemen, and ladies and gentlemen, please put your hands together for this wonderful panel session. And I'm happy that you haven't said stop. Thank you very much.
You did a fantastic job. Give him a round of applause. He understood the brief, which was short but concise and fine, and it was a great discussion. Jean, apologies. Earlier, Jean was supposed to present, but we ran out of time. Thank you for joining the panel. That is Jean Bodu, Senior Financial Sector Specialist at the World Bank, who was to present to us. Big smiles for the cameras, and then you can take your seats as we now progress towards close to the end of the forum now. Thank you very much for our final discussion on another hugely important topic. Your Excellency, we need another day. Your Excellency, we need another day here. We truly do. Thank you to all the moderators who have done an excellent job of squeezing these massive issues into a very short period of time. We're now going to move on to a subject that's very close to my heart, one of our favorite issues and one of the most important issues for Ethiopia and the African continent, remittances. Ambassador Fitsum Arega, I'd like to invite you to the stage as one of our panelists. He's the Director General of the Ethiopian Diaspora Service. I would also like to invite Yene Hassaba Tadesse, Director, Foreign Exchange Monitoring and Reserve Director at the National Bank of Ethiopia. If you could please join us. Yene Hassab, if you could please come up. Thank you very much. Ephraim Tasafi Tirefe. I'm getting good at this. CEO of Ethiopia Forex Bureau. Please join us. And then we have Fitsum Merdasa, who is the co-founder of FastPay ET. To moderate this session, we have Mr. Tafire Tesashwe, Governance Advisor, Tony Blair Institute for Global Change, the iCapital Africa. If you could please take your seat, Mr. Tafere, to moderate this discussion on remittances. Again, I will beseech you to keep the discussion short but impactful. Over to you.
Thank you very much. Can you hear me? Yeah. Thank you very much. I will try. This is the last session, and we want to hear the governor as well. He's been patiently waiting here. So we'll try to see whether we can wrap up in about half an hour. Good afternoon, ladies and gentlemen. Indeed, this is a very important topic. We know that increasingly remittance has become significant, especially in recent months and years as ODA flows became sort of scarce and FDI become unpredictable. The remittance flows become critical source of external finance for many developing countries like Ethiopia. Now, the fact that remittances are important is undeniable. Last year, in 2024, for example, global remittances was around $685 billion. This is more than both FDI and ODA. Now, this refers to the official flows. In fact, according to estimates by World Bank, the remittance flows through informal channels amount roughly half of the formal flows. What does it mean? It means that roughly global remittances are about $1 trillion financial flow. And this is very, very important. Now, remittances, we have to remember that. Remittances are basically private financial flows. And this is very important for government to remember in designing policies to influence official flows. Now, as private flows, remittances, as we know in this country, for example, they help with to supplement the household income. They help with to cover medical costs and pay for schools and reduce poverty. And they enable households to save for the future. Now, this is very important. And it helps with social development. But we want remittances to do more than just simply support families. We want remittances to serve as finance for the broader development objective. The question is, how do we do that? And how do governments achieve that? So one way is to ensure that remittances flow through official channels. And that's why we're here today. That is the focus of our discussion. And we're fortunate today to have experts in this field to help us. So let me start first with Ambassador Fusum. Now, the establishment of an office to manage diaspora affairs, and more importantly, in my view, the appointment of someone with in-depth knowledge and experience of investment promotion and a seasoned diplomat as Director General suggests and signals that the government attaches greater importance to the role that diasporas can play in the economic development of the country. So I was going to ask you two questions, but I will combine them for the sake of saving time. And what we want to know from you is that what are the type of initiatives and policy measures being taken by the government to ensure that diasporas play a critical role in economic development? And then, more importantly, our subject today to harness potential, potential role of remittances. And also linked with that, if you could, as I said, ODA is decreasing. We've seen what happened with USAID and how donors are reacting, and increasingly as a source of external finance, remittances are going to be very important. So how do you see, or how does the government see the role of remittances in the development side? The social, as I said, it contributes. Thank you very much.
Good afternoon, everyone. Thank you, Dr. Tesfacho. I think as part of the Ministry of Foreign Affairs, my institution have a privilege to work with our embassies and consulates overseas, 50 of them, who are there for bilateral activities and diaspora affairs, business diplomacy, and the likes. So we've been through this embassies and consulates reaching out to the diaspora, because most of them come to these embassies, consulates for services. And through that opportunity to talk to them directly, just to give you an example, the kind of client number I'm talking about, just in one area in Dubai, they have more than 72,000 clients to renew passports, to get some kind of consular activities. So whenever they get a chance, they promote the formal channel is a better one, and that's not the only one, by the way. Since the national banks made the reform in July, and the continued education through National Bank as well as our office in partnership with our missions, I believe that impacted a lot in increasing the diaspora, the remittance in the last 9 months. Our budget year counts from July to June. So last year, the entire year remittance was $4.4 billion US, and this year has increased to 5.1 billion for the last 9 months only. So it shows that there is progress, but when you compare to what has been achieved in other areas like export, coffee, gold, and the likes, there are multiple fold increase in those export items. But when we see the remittance side, it's not as as close to this export values. So it shows that we need to continue educating the diaspora, and also I think fintechs, banks, all stakeholders need to do the sensitization as well as providing incentives. I heard a lot of banks are now considering to provide some incentives by way of cutting the transferring fees. But again, all diasporas or immigrant laborers overseas are not the same. Just let me pick one example. In the Middle East, there are many immigrant laborers, millions by the way. Just last year, I mean the last 9 months, more than 400,000 people have been moved for work in the Middle East. So you can imagine how many there are in those areas. And because of language barriers and documentation issues and the amount of funds they may have may not qualify for big banks to open accounts, and they fell into whoever is available. In this case, there are agents who collect cash and transfer, do some kind of transfer locally here, but the foreign currency remains in the sender's country. So there is a huge informal sector remittance still going on despite the reforms because of the issues I just mentioned. This is one case in the Middle East, but when we go to in South Africa, that's totally different. In North America is also another one. So we have to have a tailor-made approach to identify the challenges and provide them the incentives on top of what the reform have already provided. That's a big win, by the way, because the parallel market and the formal market has been, the gap has been widened. That's by itself a big win. But despite that, still there are people who are unable to, and I believe there are solutions for those issues. And I believe, the National Bank, together with our missions and all stakeholders in the financial sector who are operating, can come up with some solutions. You have heard the global remittance value, and 5-6 billion doesn't mean anything when we see the amount of, it's believed that close to 40% is coming in a formal way. So we have to untap the remaining 60. But it's not only the remittance that we are interested. We believe people send money, maybe 1%, 2% of what they have earned. And the remaining, you can imagine how much it's going to be. And we need to tap to that through investment promotion, special package like what we've been hearing this morning about housing packages, and also ESX can come up with some products to attract the diaspora who are looking for elsewhere to invest. So we need to go beyond the remittances and attract investment through different mechanisms, what we have been hearing the entire 2 days. And I think there is a big hope and a lot of opportunities going forward. Thank you.
Thank you very much, Ambassador. I think this is very encouraging. You mentioned 5.1 billion. I'm going to ask someone whose job is exactly to monitor this in a minute. But this is more or less, although exports in goods may go up, but this is really higher than exporting goods in the past. So this is very impressive. Education is very important, but more importantly, policies are even more important in terms of shifting the remittance flows to formal channels. Now, my next question would be Ms. Yanehasa Abtadesa. You have a very important role as Director of Foreign Exchange Monitoring, a Reserve Directorate. So I have a couple of questions. One of them is we want to know what the impact of this recent reform has been on remittance flows. Ambassador has hinted that it may have increased it. But at the same time, from you, we want to know the scale of the remittance we're talking about, to Ethiopia. Linked to that, if you could also say something about measures being taken to reduce the cost of remittance, because historically, one of the reasons why remitters use informal channels is the cost of remitting is high. So if you could sort of shed light on these questions. Thank you.
Thank you, Dr. Tafer. As you have already mentioned, and
We're having a problem with the mic.
Thank you, Dr. Tafera. When we see the remittance from the contribution to the economic development of the country, the current reform taken by decreasing the gap between the official rate and parallel rate by unifying by giving the by taking a measure by the National Bank of Ethiopia to make the market-based exchange rate applicable starting from July 2024. This helps the remittance flow from the parallel market to official market because it has significantly decreased the gap between the parallel rate and the official rate. So this encourages the remitter to use the official market, the banking system to remit finance to the country. As the ambassador states that the impact is significant within these 9 months, $5.1 billion is remitted from the private sector. This is this is almost similar to the export earning of the country. The remittance increases by 84.1%, while the export increases 109% from the previous year, same period. So it shows that it is significant for the economic development and also the reserve buildup of the country. Remittance has a significant impact. The National Bank of Ethiopia has taken measures besides implementing the market-based exchange rate by creating awareness in taking an initiative named DEBO on September 2024, which incorporates banks, local banks, to create awareness how to approach the diaspora community, that is Ethiopian living abroad, and also the Ethiopian nationals to use the official channels. In order to simplify this, also the Unite ET, a platform is created which eases the diaspora community open an account without going to the embassies, without going to the correspondent banks, which they have to do before, by using the United platform, the digital platform. And in that platform, all banks have already listed their products, and the diaspora has the opportunity to see the products and the cost of the exchange rate and every information that banks are offered. And then with that, they are enabled to open foreign currency account. 3 types of foreign currency accounts are already introduced in our directive. That is current account, fixed account, and saving account. They can choose the account and open an account without any problem. And this creates transparency and also encourage the diaspora to save money, and also the receivers, the remittance receivers, due to the policy change that we have made, the Ethiopian residents are allowed to open a foreign currency account. So instead of consuming the fund remitted to them, they are entitled to open a foreign currency account and save the money, and it encourages saving and investment for the future. Furthermore, the costs regarding to the transparency, our directive is clearly stated that the remittance service providers to charge zero if possible, if not more than 1% while remitting fund to the country. So this gives a transparency to the remitters and also to choose the better remittance service providers. Besides the remittance service providers that has traditionally known like Western Union, MoneyGram and others, the digital system and also the fintechs are also allowed to work in collaboration with the banks. So it makes the remittance easy, costs minimum cost, and at the same time create confidence and encourage remitters to use the platform. So these are the major directives and the major policy measures taken in order to encourage remittance to use the official channels.
Thank you very much. I think improving on transparency, the confidence you talked about, reducing costs are very important for remitters, especially the numbers that Ambassador mentioned going to the Middle East. These are remitters of small amount and cost matters. So this is very, very encouraging. Now, you talked also about the gap between the official and parallel market and exchange rate and how that has improved since the recent major and bold, if I may say, reforms. Now, part of this recent financial reforms is the opening of non-bank foreign exchange bureau. And luckily here we have now Mr. Ephraim Tesfaye Terefe, CEO of Ethio Forex Bureau. Such bureaus, I guess, can be important channels for formalizing remittances and discouraging the use of informal or illegal channels. Now, my question is, although the gap has narrowed, there is still a little gap, about 10% or so. So the question is that, does the existence of this gap still affect the role of your bureau? What has been your experience? Although you restarted it recently, if you could share with us. And in your opinion, what else can be done to eliminate these gaps? And link with that, if I could ask you how you see the role of such bureaus in remittance flows. Thank you.
Thank you to having here to National Bank. Our birth is before 7 years. This is emerging business for Ethiopia finance industry. Thank you the policy shifting because it bears us. Yes, Forex bureaus has significant role to formalizing remittance from abroad, from diaspora community to Ethiopian economy or Ethiopian household. We have trying to catch our market based on this competitive environment by attractive price, by efficient and simple system to attract diaspora community. Our clients come to our office with their hard currency while visiting their relatives or their holiday. Day to day or time to time, this amount increasing, even if the gap between the parallel market and official market below 10%, sometimes near to 10%. Why the gap exists? Why the black market or the so-called parallel market exists in Ethiopian economy? I trying to show highlights on the matter. This is a long history. Ethiopian black money market practices has a long history and cannot decrease drastically by policy shifting. That's why it comes from the black economy. It is an instrument of a black economy, which means so many actors involving in black economy, such as human traffickers, smugglers, contrabandists, and the like. In other side, so many peoples trying to hoard foreign currencies in their box or pocket in their home or somewhere. They are part of this black economy. In the meantime, illicit financial flow in some neighboring countries such as Dubai, currently to Uganda. So many people trying to get an asset in abroad. Those factors still the cause of the black market in this Ethiopian economy. In the other sides, legal traders or business persons involving in this market because of a lack of rule. They sometimes the rule and regulations impeding them to practice their regular business. For instance, exporters. So many exporters involving in this sector because bypass the minimum selling rights stated by ministry bureaus or like trade bureau and the like. For instance, for 2 months, minimum selling price set by Trade and Regional Integration Ministry for 1 ton is 1,750 USD minimum selling price, but the market was below that, around 1,500. The exporters no choice to transact in this market, and they cover buying from black market in Dubai account and somewhere to open to LC and cover the amount 200 or 150 birr to the buyer. Their practice is legal, but the law not allowed to play as they want. In the other hand, importer, especially in China, in most our goods come from China, and the importers having payment issue because illicit not applicable for China business in most cases because lack of trust between Chinese and Ethiopian traders and lack of banks within Ethiopia and Chinese banks. So their practice is legal, but they forced to pay in advance for Chinese dealers, but the law not allowed to pay this amount in advance. LC will open after the goods arrived in Djibouti. Before that, the business people paying the cost by foreign currency from this black market. They twice paid for one product and they ask after conclude the transaction. These types of impediments will be easing by regulating applicable laws, maybe increase the remittance through formal channel. That is the cause of the gap still exists in Ethiopian hard currency.
Thank you very much. I think the message we're taking from you is that I think we have to recognize that the gap has narrowed. The policy is working, but there are still a small gap. And what you're saying is that there are additional rules and regulations that needs to be implemented, and including perhaps about smuggling and contraband is enforcement. So this is an issue you're raising, I believe. Now, we've seen in this forum about fintech, we've seen a lot of companies emerging, application of technology, digitally delivered services increasing, including fintech. So we have with us today Atofisum Merdasa. Yeah. He's a co-founder of FastPay Ethiopia. So what I would like to ask you is, what are the advantages, since you started recently, perhaps potential advantage, I should put it that way, of these digitally delivered fintech type of services in facilitating remittance flows to countries such as Ethiopia, where financial inclusion is still evolving. And do you believe that such platforms will support the formalization of remittance flows? And linked to that, since we don't have much time, I think it would be good very briefly if you tell us from your experience in terms of the digital infrastructure and either regulations, policies needed to make such platforms effective, especially for remittance flows.
Very much. First of all, I would like to congratulate the organizers for putting such a wonderful panel and for the forum. I would like to congratulate you. Before I speak about advantage of financial technology, I would like to speak about the challenge of remittance, specifically traditional remittance. Remittance has a lot of challenges. Before we build up our platform, we try to list the challenges and try to find a solution in digital ways. What are the main challenges that Ethiopian remittance has nowadays? The first challenge is remittance is very expensive. Most traditional remittance operators charge 5 to 10% for transaction fee, which is very expensive. When it comes to a digital platform, most of the fintechs now give the service free of charge or a very significant low fee. The second challenge the traditional remittance has was accessibility. In order to send money, you need to drive miles. Sometimes when you get there, there's a long line and waiting, and it's not accessible. But in our platform, anybody can send money from anywhere. As long as you have internet and smartphone, our digital platform makes it super easy to send money. The third challenge we came across was the receiver side. The receiver side was a big challenge. People not receiving the fund on time. Most of the time, when you send money through traditional platforms, it takes about 3 to 4 days. Sometimes people send money for emergency, and you need the money right away. When we talk about digital technology, you send the money, and the money arrives less than 10 seconds. It's an instant, so it's super fast. Digital technology gives us this advantage of accessibility. The fourth challenge is most of these traditional financial institutions works office hours. Most of them work 8 to 5. If you cannot make it during that time, you're not going to be able to send money. Sometimes you have some emergency, you send money because of this time limitation. You cannot send. But in our platform, as long as you have internet, again, smartphone, you can send money 24/7. Our platform is accessible to send money from anywhere at any time. The other challenge was at the location. When you travel abroad or when you travel out of your continent, used to be hard to send money, but in our platform, you can access your bank account from anywhere. There's no location restriction. So I strongly believe financial technology offers significant key advantage of formalizing remittance as well as increasing remittance inflow. I would like to point what needs to be done to improve and to increase the inflow of remittance. The first thing I would like to put on point is we need to empower our community with financial technologies and also educate about the advantage of formal remittance as well as the disadvantage and the risks of using informal channels. The second major thing we need to take is the financial regulators need to be open and supportive for financial technologies and innovations. Third, we need to build a strong KYC system. I think integrating with the national ID will be a great solution. Lastly, I don't want to take time, so I want to wrap up quickly. Lastly, when digital technology grows, there is a big challenge come with it. The challenge is fraud. So building a strong cybersecurity and data protection is very, very critical. We need to protect our customers and users as well as building a trust. Before I conclude, I would like to appreciate the reform. I'm a big fan of this reform. This reform gives us an excellent opportunities, especially for banks. Banks nowadays, they can offer competitive rates as well as incentive to attract remitters. I'm a big fan. It's amazing. Back in the days, I'm also part of the diaspora community. Back in the days when you send money, we used to have a lot of challenges. But at this point, honestly speaking, there is no need to go to informal channels because banks are offering amazing rate. There is no need to go informal channel and risking the transaction. And I don't believe nowadays people need to go to informal market. And thank you very much.
Thank you very much. I think the overall takeaway from this discussion basically is that the recent reform is working and helping us to attract remittances through the formal channel. This is one message. And secondly, the digital technology have advantages in terms of making it less expensive and accessibility, fast deliveries. These are very important, so we have to build on that. And as Ambassador said, we need education, not only about educating the diaspora, their role and the important role they can play, but also in terms of the importance of formal remittances. And there are rumors, and I must stress, this is just a rumor, but apparently in the US, they are considering possibility of taxing remittances. So remitters may be charged apparently about 10%. This is really bad news for countries like Ethiopia and others that rely on remittances. This also means a wake-up call. We have to work hard. We really have to use any policy available to ensure that the diaspora, because diasporas will send money. In fact, most dependable external source of finance is the remittances. We've seen it during the COVID and other crisis, global crisis 2018. FDI went down fast, ODA went down fast. Remittances continue because people send to families. But now we want it to be channeled officially so that we can use it not only for family, support family, but also in the productive sector. Thank you very much.
Thank you. Thank you very much. Can you hear me out there? Thank you. I hope you can hear me now. Yes. Okay, so thank you very much for that fantastic discussion on remittances and unlocking the potential of remittances. Please applaud the fantastic panel. It was not easy to be the last panel of the day. If we could just step forward for a photograph. Thank you, cameramen. Thank you very much for that very interesting discussion that was moderated by Tafiri Teseshwe, Governance Advisor at the Tony Blair Institute for Global Change and the iCapital Africa. We now are reorganizing the stage for the much anticipated fireside conversation, discussion with His Excellency, the Governor of the National Bank of Ethiopia. If those who are on stage could move slightly faster, we just need 2 chairs. Please do not dismantle the entire stage. We still need 2 chairs, unless you want us to stand. Thank you very much. Thank you. We're going to be having a short fireside conversation with the Governor. I hope he's ready. I hope you're ready, Your Excellency. He's ready, he says. I know there are many people here who want to hear directly from His Excellency about some of the work that's been undertaken by the National Bank. Having a mic change. National Bank, much better. Now you can hear me loud and clear. It looks like the hot seat is ready, Your Excellency, so you can come up on stage. Please welcome him. His Excellency, the Governor of the National Bank of Ethiopia, Mr. Mamo Moretu. Great, thank you very much. Please have a seat. I want to make sure you're comfortable. We need water for the Governor, please. A glass, somebody help me, and a microphone. I'm so happy to sit down and be the person with the challenge of interviewing you. I hope you're ready.
I'm ready.
You're ready, good. Thank you so much, Your Excellency, for first of all creating this absolutely fantastic, insightful, informative, educational platform for discussion. I know it has not been an easy undertaking, and I want to congratulate you on this successful forum.
Thank you so much. No, thank you to you. Thank you to you. You know, it's Friday afternoon and the room is full, so thank you so much for everybody for coming.
Awesome. Thank you so much, Your Excellency. So I have a list of questions here. I hope you were not given these questions beforehand.
Let's go for it.
Big reforms often come with big challenges. Can you share some of the toughest implementation challenges you have faced during this process that we've been learning about and discussing over the last couple of days, and how the National Bank of Ethiopia has managed to overcome some of these hurdles?
So I'm going to speak from heart, so, you know, some of it might be incoherent, but I'll try my best. So what we're trying to do at the National Bank is quite complex. You know, we're trying to pursue multiple policy initiatives, multiple reforms at the same time. So this kind of complex reform naturally will have significant challenges and significant complexities. So it's very difficult to list all of them here, but I want to just talk about maybe 2 or 3 of them if it is useful for the audience here. I think the first challenge that we faced as we approached this reform was the challenge of, or I would say the courage to name the elephant in the room. By that I mean there are problems that everybody knows exist, but it's very difficult for most people to discuss and even importantly to make a progress on. So having the courage to name the elephant in the room is one of the biggest difficulty in this kind of complex reforms. Because people tend to talk about some of the problems that we face, for example, the problem of misaligned exchange regime, the problem of inflation, but it's very often, there's no progress, meaningful progress on those particular issues. So naming the elephant in the room, meaning naming the difficult issue, ripening that issue, building consensus around it, is one of the most difficult parts of undertaking this kind of complex reform program. Second thing I would say, if I may, second thing that I would say is in reform initiatives, there are steps that one needs to take. I think first is the time one needs to take to adequately prepare the reform and to conceptualize the content of the reform. But that's not enough. So one needs to go beyond that and build internal consensus, and not only that, execute it in a manner that is sequenced and also meaningfully communicate about it. So those steps are very, very critical. So sometimes in this kind of initiative, where a whole of government approach is needed, instead of the reform being by one government agency, but rather for it to be effective that the whole of government approach is needed, then one needs to invest significantly in building internal consensus. So it might take time, but that is an investment that is worth taking, because otherwise, the reform will not be effective. Third thing I would say is this kind of reform requires one to have a certain kind of mindset. That mindset, in my view, is a mindset of being able to live in ambiguity. Even if you don't know the answer, even if things are uncertain, even if there is disequilibrium and chaos and tension within the team, across the government, one needs to have the ability, the mental strength to sit through it until things gets clarified. So that ability to sit in ambiguity, I would say, is an important issue, an important challenge, and constantly one needs to tell oneself that, listen, things might not be clear, but I'm going to stay at it. I'm going to sit with it until things become clear. And finally, even if you think that you have the right answer, sometimes in the course of the implementation of this kind of reform, all sorts of things go wrong. So again, you need to have the abilities, adaptive capacity to try to identify what the root cause of that and make a course correction in the course of the implementation of the project. Just in our panel before us, the speaker from the FX Bureau was talking about some of these additional steps that's needed to further deepen the market. These are the kind of insights that we need to take into account as you implement this reform. So overall, just to conclude, this kind of effort doesn't have an end. It's a marathon, but it has to be run at the speed of a sprint. So it's a process. When you address one problem, another problem will also emerge. So having that mindset is absolutely critical.
Thank you, Your Excellency. You said it is a marathon, so this leads very nicely to my next question. What is your plan? What is your strategy for sustaining the reform momentum, especially in the areas of governance and internal capacity at the National Bank, to develop the next generation of talent and to position Ethiopia's financial sector for a bigger role globally?
So, of course, among different government agencies in Ethiopia, the central bank is one critical institution that is entrusted with the task of driving the economic reform program. For us, the mandate of the central bank is clearly articulated in our enabling legislation. So whatever that we do should be on the basis of the new enabling act that we enacted, and that act gives clear mandate for the central bank. The central bank will focus on price stability, but to be able to carry out its task, the central bank will also have to invest in its own internal capacity and talent, and its own governance. All of that is contained and articulated in the enabling proclamation. It has clear governance framework, it has clear institutions, it has clear term limit to the key officials, it has clear mandate for the central bank itself. Now, the additional task and the follow-up task for us is to be able to implement that fully and thoroughly. And one thing that I will make reference to here is our effort towards building a center of excellence, not only for the central bank, but also for the broader financial sector in Ethiopia. As people in this room know, we have an academy of financial institutions. We have an amazing facility. So the plan is to make this facility a truly important center of excellence, not just for the banking sector in Ethiopia, but the broader financial sector going forward. So we are investing significantly in it, we are allocating significant resources for it, and we are also forging partnership to make this a truly important center of excellence, because talent really matters. People do really matter, particularly talented people matter, because it's only with people that you can actually drive important change.
Thank you very much, Your Excellency. At this forum, you've heard many perspectives and ideas. What has stood out to you from the discussions? Were there any particularly insightful moments or comments from participants that particularly resonated with you or even surprised you?
So I think first of all, I mean, I'm amazed by the big turnout and by the quality of discussion that we had over the course of the last 2 days. And I really want to thank each and every one of you because people, it's an action-packed event. There are a lot of ideas, and in my own counting, there are close to 70 speakers in the course of the past 2 days. So all sorts of ideas, all sorts of views that we need to take our time as a central bank to digest and synthesize going forward. But a number of issues, in terms of broader theme, a number of issues come to my mind. The first thing is, I would say, that we've made a decisive and irreversible, I would say, step toward this macro stability is an important precondition for financial sector growth in Ethiopia. So I think this point is very, very important. And we made really significant effort in terms of restoring economic stability in Ethiopia. So there was direct or indirect reference why and how this is important. The second thing is there is a team, a broad team emerging from different speakers where people say we've made much progress on this area, but much more is needed. We need to do more. We need to do much. We need to go further and faster in some areas. So there are teams around this area. I would say, for example, on the area of digitization, financial inclusion, there are progresses, but there is a need to do more. Again, there is significant work on insurance, MFIs, interest-free banking, and consumer protection, but it's not enough. So we have to do more. So we take this as a task for the central bank. So there is also a theme around new areas of work, so-called frontiers of finance, where Ethiopia not only will catch up, but can truly be a leader. In this area, for example, one could mention the work that we did in terms of payment, the whole digitization of payment. This is quite a revolution what's happening in Ethiopia. But important thing is to go beyond payment. Shouldn't just be about transaction. We have to move beyond payment. We have to look at digital finance, digital saving, digital insurance, digital investment. And there is already significant work that we can build on. So I think the need to emphasize this area is something that we'll also continuously work on. The digital and the data issue has been mentioned on numerous occasions, and the need for innovation. I mean, this was a theme that is sort of a subtext to most of the conversations that we are having in this forum. The work and the progress that we're making on the capital market area is also important. I like the idea of Ethiopia stack, something that the central bank will be working with across government agencies. So much insight, wide-ranging views from a cross-section of speakers and representatives, locally, internationally, something that will take our time, digest, and take what we consider to be useful to further deepen our work as a central bank.
Thank you very much, Your Excellency. We've had a large variety of people here from different parts of the ecosystem. What is your view on the role each of these players in the ecosystem have to play? Because obviously the bank cannot achieve what it's trying to achieve alone. And what is your appeal, your message to these different partners in the ecosystem?
Yeah. So what resonated with me and what I actually took note is what Munir said during their session, where he talked about partnership. I think that word is very, very important. So the notion of partnership and community. So we are here to build bridges, and we are here to build partnership. Whatever that we will do at the central bank cannot be done alone. It can only be done in partnership with other players. Whether these players are local banking sector or fintechs or foreign banks or development partners, everything that's worthwhile that can be done in this country can only be done through partnership. So the idea of partnership and the idea of community is something that resonated with me. So this is a task for all of us. And the central bank is eager, the central bank is open, the central bank is committed to forge and deepen these partnerships going forward.
Thank you very much, Your Excellency. My final question. Looking beyond Ethiopia's borders for a moment, do you see Ethiopia taking a leading role in the region in areas like inclusive finance, fintech innovation, mobilizing the diaspora or mobilizing diaspora capital? How might Ethiopia leverage its reforms to become a regional pioneer in digital finance services or in tapping in the diaspora for development?
So I think in our work, we try to classify our reform programs into two. I think there is what we consider to be kind of catching up reforms. So the work that we are doing on the FX reform, on the monetary policy reform, to some extent on the opening up of the financial sector, for most part are catching up reforms. These are reforms that have been implemented in other countries that we haven't done, that we will be doing in the coming months and years ahead. But there are also what we consider to be cutting-edge reforms, or sort of a shift to the frontier of finance. And an important area for us is the work that we're doing in innovation space, in the digital finance space. I can truly believe that this is an area where Ethiopia can actually be a leader going forward. And the central bank will play its role. The investment that we made in digital infrastructure, the talent that we have in this country, the demand from the public for this kind of product and services, the need for innovation in this regard, the work that's being done by a number of fintechs and banking industry in this country, the skill that we have in this country, the investment that we make in the digital infrastructure will make us a truly competitive place for digital innovation, digital finance, and whatever we do in this country can also be an example to other countries. And so, in short, this is an area that we'll be focusing going forward. I always say, at the central bank, we were busy trying to restore stability, macroeconomic stability. We are busy trying to address more fundamental policy imperatives, whether it's FX reform or monetary policy reform. But at the end of the day, finance has to deliver for development. The point of financial intermediation is to support growth, to support development. There is no other reason to it. And going forward, because we have fundamentally and decisively addressed the macro instability agenda, the focus, the energies, the bandwidths that we have will be focused on making sure that finance is delivering for development. In this regard, there's much work to be done in terms of financial inclusion. I mean, in this stage today, we talked about, for example, agricultural finance, where there is a significant demand for finance. We talked about housing finance, interest-free finance, SME finance. These are the new frontiers for finance. So we have to make actually finance and financial intermediation deliver for development. So the focus, the interest, and the energy of the central bank going forward will be spent on innovation and making sure that financial inclusion objectives are made going forward.
Thank you very much, Your Excellency. We have come to the end of the fireside, but I'm cognizant of the fact that there could be one or two things that have come to mind that you may want to say to this esteemed audience who have joined and remained committed to this forum over the last 2 days. So I'd like you maybe to make a closing remark, if you don't mind.
So I don't have much to say, except by the conclusion, I want to thank a few people for organizing such a wonderful workshop. I think this workshop, Ivan, as you said, exceeded our expectations. We didn't know what we were getting into when we were planning this conference. It was a small idea and becoming a serious idea going forward. So I think for, as I said, Friday afternoon, the place is full. and the people who actually put together this conference. I want to thank all of them. But first, I want to thank my team at the National Bank of Ethiopia. Energetic team, young team, hardworking team. Please thank them on my behalf. I also want to thank all the participants in this room who were with us for the last 2 days in this forum, people who came from different countries. It's not just banks in Ethiopia, fintechs in Ethiopia, but also people who made the effort to travel from different countries to join us in this meeting. I know your time is valuable for your perspectives, for your energy, for your participation. All bank CEOs, presidents, private sector representatives, development partners, all of you who has been participating in this forum, particularly the 70 panelists who shared their insights so generously for the past 2 days. All of you, thank you so much. And finally, special thanks to our partners who helped us put together this event, IFAD, IFC, the MasterCard Foundation, and the World Bank. All of you, again, thank you so much. And the Prime Minister Office and the Science Museum that hosted this event. It's beautiful, beautiful, beautiful facility. The organizers and people working on the logistics, I want to thank you, all of you, again. Finally, to you, Ivan. So, you've been a perfect facilitator, don't you agree? So, she smoothly led us into the conclusion. Thank you so much. We hope we'll get to work together in the future as well. Thank you so much for your time. And thank you, everyone, and have a wonderful evening.
A round of applause for His Excellency. Thank you so much, Your Excellency. You can return to your seat. Thank you so much. I'll take the microphone from you. Thank you. Please return to your seat, Your Excellency. Give him a round of applause. What a wonderful governor, I have to say. I'm very, very impressed. The governor said it all. I wanted to say thank you to everyone, but the governor really said it all. Thank you, everybody who took their time to come to this fantastic inaugural forum and share their expertise and insights. Every single one of you is appreciated by the bank and by the entire team at the organization. A couple of housekeeping notes now as we close this 2-day forum. I've been asked to remind everybody that you can find all the presentations that were shared, the QR code for the national, the roadmap, agri roadmap, the QR code for the Women's Inclusion Scorecard, all on the Ethiopia Finance Forum website. The website address is ethiopiafinanceforum.com. It could not be simpler. So you can find your way there to download all the presentations and study them carefully. We still have the exhibitions going outside. The exhibitors are waiting for you. They are not packing up until you have been to their various exhibitions. And then finally, we're not going to let you leave hungry and thirsty. You can go out to the terrace for some refreshments, some snacks, and some networking. Once again, from the inaugural Ethiopia Finance Forum, it has been a pleasure and an honor to truly host and MC this event. And we wish you all a wonderful late afternoon and evening and safe journey to those who are traveling this evening. Thank you and goodbye.
A transformation is underway, and Ethiopia is leading. From bustling markets to digital wallets, the way we interact with money is changing fast. But with rapid change come urgent questions and powerful opportunities. Ethiopia's financial landscape is undergoing transformative reforms. Yet navigating this vast financial ecosystem requires more than regulation. It demands inclusive dialogue and visionary collaboration. The Ethiopia Financial Forum was born out of a simple yet powerful idea. What if we could bring together banks, insurance providers, microfinance institutions, remittance providers, and digital payment pioneers, all under one roof. Not just to discuss change, but to design it. Why does this matter? Because when the financial sector works, people thrive, small businesses grow, remittances reach families faster, and customers are protected. This forum is where ideas become policy, and policy becomes progress. Over the past 2 days, something remarkable happened. This wasn't just an event, it was a moment of alignment. From central policymakers to local innovators, the conversations were real, the energy was tangible, and the vision was shared. The Ethiopia Financial Forum delivered more than dialogue. It delivered direction. Each panel brought together industry leaders, policymakers, and innovators, working toward a stronger, more inclusive financial system for all. Topics included macroeconomic reforms, Ethiopia's banking sector, financial inclusion and literacy, agricultural finance, insurance, interest-free banking, digital finance, housing finance, capital markets, women in finance, microfinance, and remittance. Each session brought clarity. Across Africa, a transformation is underway, and Ethiopia is leading. From bustling markets to digital wallets, the way we interact with money is changing fast. But with rapid change come urgent questions and powerful opportunities. Ethiopia's financial landscape is undergoing transformative reforms. Yet navigating this vast financial ecosystem requires more than regulation. It demands inclusive dialogue and visionary collaboration. The Ethiopia Financial Forum was born out of a simple yet powerful idea. What if we could bring together banks, insurance providers, microfinance institutions, remittance providers, and digital payment pioneers, all under one roof? Not just to discuss change, but to design it. Why does this matter? Because when the financial sector works, people thrive, small businesses grow, remittances reach families faster, and customers are protected. This forum is where ideas become policy, and policy becomes progress. Over the past 2 days, something remarkable happened. This wasn't just an event, it was a moment of alignment. From central policymakers to local innovators, the conversations were real, the energy was tangible, and the vision was shared. The Ethiopia Financial Forum delivered more than dialogue. It delivered direction. Each panel brought together industry leaders, policymakers, and innovators, working toward a stronger, more inclusive financial system for all. Topics included macroeconomic reforms, Ethiopia's banking sector, financial inclusion and literacy, agricultural finance, insurance, interest-free banking, digital finance, housing finance, capital markets, women in finance, microfinance, and remittance. Each session brought clarity, each debate brought urgency, and each question deepened our resolve to build a financial system that truly works for everyone. Discussions turned into action points, connections turned into partnerships, and insights turned into blueprints for change. The National Bank of Ethiopia thanks you for being a part of the Ethiopia Financial Forum, a forum for new ideas and lasting impact. See you in 2026. Across Africa, a transformation is underway, and Ethiopia is leading. From bustling markets to digital wallets, the way we interact with money is changing fast. But with rapid change come urgent questions and powerful opportunities. Ethiopia's financial landscape is undergoing transformative reforms. Yet navigating this vast financial ecosystem requires more than regulation. It demands inclusive dialogue and visionary collaboration. The Ethiopia Financial Forum was born out of a simple yet powerful idea. What if we could bring together banks, insurance providers, microfinance institutions, remittance providers, and digital payment pioneers, all under one roof? Not just to discuss change, but to design it. Why does this matter? Because when the financial sector works, people thrive, small businesses grow, remittances reach families faster, and customers are protected. This forum is where ideas become policy, and policy becomes progress. Over the past 2 days, something remarkable happened. This wasn't just an event, it was a moment of alignment. From central policymakers to local innovators, the conversations were real, the energy was tangible, and the vision was shared.